screen still glows. A kettle cold, but my hand still goes. I mark that range with a coffee stain. Clean mind, sharp eyes in the moonlight train. Order stacked like cards in the deck. I wait my turn, I don't blink yet. One clean setup, that's the code I live. Half asleep, but I got more to give. Hear that tick, hear that pulse. Feel that pull in my bones. I came this far for the long game. I won't leave it alone. London calling, London calling. I'm up for the open. London calling, London calling. I want that moment. Trey clean, Trey smart. London calling, London calling. I came to earn it. Dark outside, but my plan stays lit. No lucky break, got size up grit. Read that candle, read that spread. Take the compass, keep my head. I lost before, I learned that sting. Now I cut my fear on a tighter string. Every dawn is a test I choose. If I want the crown, I'll pay my dues. Hear that tick, hear that pulse. Feel that pull in my bones. I came this far for the long game. I won't leave it alone. London calling, London calling. I'm up for the open. London calling, London calling. I want that moment. Trey clean, Trey smart. London calling, London calling. I came to earn it. Let the night press in. Let the doubt get loud. I stayed on my feet. I stayed unbowed. One more shot at the life I chose. One more step when the market wakes. London calling, London calling. I'm up for the open. London calling, London calling. I want that moment. Trey clean, Trey smart. London calling, London calling. I came to earn it. Come on. Come on, come on. Come on, huh. Hey. Come on. Hey, 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 hey. First bell hits and the floor goes hot. Screens start flashing, don't miss your spot. Price line moving like a stray bullet round. Keep your hands steady, keep your feet on ground. Order stack up, then the slip away. Every tick a test, every second pace. Woo! I can feel that roar through the iron door. Everybody praying for a little more. Hold your breath now. Read the tape fast. One wrong move and it won't last. Open fire. Open fire. Keep your name above the hands on God. When the floor starts shaking and the whole thing spins, you don't chase the noise, you let the truth win. Open fire, open fire. Keep your name above the wire. Open fire, open fire. Live through the market choir. With some, lose some, stay in line. Take the hit, then take your time. Open fire, open fire. Hold your name above the wire. Step up, step up, step up. Step up, step up. Step up, step up, step up. Saw the screen glow green, thought I had the code. One tap, one grin, then I doubled my load. Borrowed time, borrowed pride, pushed it to the edge with my finger on the slide. Fresh white shoes on a shaky floor. One more click, I was asking for more. Big talk, big ring, thin as smoke. I was dancing with fire and I felt that choke. Heart in my throat, hand on the wheel. I kept saying maybe, like maybe it was real. One more swing, one more spin. The house was smiling, letting me in. Bet it all, bet it all, bet it all, baby. Bet it all, bet it all, bet it all, maybe. Ride too high, burn too fast. Cash in my pockets, gone in the blast. Bet it all, bet it all, bet it all, baby. Bet it all, baby. Now the room.
Good morning, good morning, good morning, guys. Good morning. Welcome to Wednesday Trade. We got FOMC minutes on the calendar today, but we have Sam Saleh coming in from Hola Prime, which I can't wait for, in the New York session. Really, really excited to talk to him and to kind of scalp with him the open, and we'll try to go as long as we can to have him on the show, which will be very, very awesome. Good morning, everybody. Good morning, good morning, good morning. How's everybody doing? Sound check, mic check, vibe check. Everything good? Gotta have another sell signal looking up. We're basically hitting London lows as we open up trade here with a pretty strong sell signal over here. We're going to try and take it. If it reverses on us, we'll go the other way. I'm just going to go see if I can get into the trade here. I am. I'm in the trade. As always, trying to, and we're done. Second trade of the day. I don't know if you guys saw the first trade of the day. I kind of took this sell signal. So we're crunching the scalps next account. So as always, I am trading account rotation, which is a unique property of the room here. Good morning, Miguel. Good morning, Cuba. Good morning, everybody. Good morning, Matthew. Everybody in the room. Oops, I gotta charge my watch. And now we're getting a bounce. We're getting a bounce off the London low. It's kind of interesting. It definitely a bounce off the London low. So definitely a trade for us the other way on the 78 account. Let's see if we can get in that. All right, now I'm long this way. It's a big extension, and I gotta basically hold underneath the low here in order to clear this trade. So we'll see if I can do that. This is the level session trade. So we hit London lows. We have a diamond green bounce off the thing. Pretty big extension. I mean, you can literally see how they lifted it off London low from 510 to 535, 25-point extension. I kind of hate these kind of candles because the profit is almost always fully in the candle. Like if this wasn't just a modest bounce, this was a complete sweep. So they run the lows, they pick up all the stop orders, they sweep it up, and then they kind of die out over here. So hopefully we get extension from my forward entry. But these type of candles just always annoy me a little bit. Doesn't matter to us because obviously we're trading small. This is just one out of 1,000 trades I'm going to do with you guys today. But this is a classic day trading trade that we like to do. Is this a V-shaped bottom in London low? We'll see. I am highly dubious. The bounce here was so strong that it really bounced all the way to VWAP, right? From one level to the next. So not a perfect structure. I'm probably, what I'm going to do? I'm going to take this. I don't like, I've seen this price action before. I don't like these floating price actions. So I'll take a small profit. I won't hit my target. And I'll wait for the next signal. The only reason I'm bailing out of this trade is because I just seen so many of these, sweep from the bottom to the top trades, and then kind of they dissolute and disseminate and basically come back down here. And then the secondary move is the really true move. So I'd rather be patient. I'd rather be patient than right at this point. They say that I'd rather be patient than wrong. I'd rather be patient than right just on this particular scalp. But overnight, scalping has been actually excellent for me, and been hitting pretty much all my levels. I am of the 9 accounts I'm trading in Tradeovate today. We're trading for our friends at Apex in the London hour, and then we're going to switch over to Hola. I have 1, 2, 3, 4, 5, 6, 9 accounts. Only 2 of them are red, 7 of them are green, which is fine. Good morning, Vietnam. Oh, good morning. I thought you were. We used to have viewers in Vietnam. There used to be a guy who was really, really active in Vietnam. Who used to come hang out with us all the time. Good morning, Max. Good morning, everybody. Good morning, everybody. We are starting the show. I gave up my scalp a little too early because I just didn't like the move. But I could have been completely wrong. This could be a V-shaped bottom, and we could go right back up to what's the next level up. Tokyo highs. Where's the London high? Oh wow, yeah. So we've been distributing all of the 5 to 6 hour, and off screen. I've been shorting all of these moves here nicely. This is the first rebound move that we had, but the only reason I kind of gave it up early was because I've just the rebound candle itself. You see this candle? It's like 35 points or 25 points, twice as large as the average ATR. When you get that kind of big bounce, it's almost like they took all the profit inside the candle. They took all the profit inside the candle. I could be wrong. I've plenty of times this thing has extended, but I've also seen plenty of times when you have a massive candle up, it kind of distributes itself down because they sweep the ladder so hard off the lows. Remember, we're hitting London lows. Everybody knows that this is London lows. And then somebody comes in and just says, I'm going to kill all the shorts. Everybody who's short at this level, I'm just going to sweep them up and force them to cover, which is exactly what they did. And that's why you have these big bounces. So we trade session level to session level because that's the highest probability trades you can see on the charts anytime, anywhere. And our signal generally is a really good one. So now I'm actually getting a sell signal. Which account am I in? I want to go to 79 account. So I'm rotating accounts. And if this thing holds it's actually holding as a kind of a VWAP failure. So we basically have a soft. Let's see. That's interesting. Is it holding? Let's see before the candle actually reveals itself whether it's a VWAP failure or not. It's got to stay red for me to get short here. Okay, sell ask. All right, I'm in the trade. Basically trading this VWAP failure. We failed at the VWAP. Trying to trade it to the downside. Maybe I'll move it up a little bit just to see if I can cover this close. Short at 27. Target is 2075. My ATR settings are standard 14 period. Nothing more fancy than that. I don't change the sorry, ATR settings. Is that what you're talking about? ATR settings? ATR is 14 period. And I'm trading 1 micro, rotating the account. Yeah, just trading 1 micro. My stop and target are 20 stop, 8 target. So it's about a 1 point. It's basically it's a 71% break even. I forgot what the risk reward ratio is. What is that? If it's 8 divided by 20. It's 1 to 2.5, right? If it's like if it's 1 to 2 risk reward ratio, it's 1 to 2.5 risk reward ratio. So it's a pretty wide negative risk reward ratio, 71% break even, and we obviously try to target 77% or better. And we've been generally doing close to 80% when I'm cooking. But here's the thing that's important to understand. I don't have to have like 77% to have a vast majority of my portfolio be positive, right? Because even let's say you hit a bad streak of trades, because you're distributing each negative trade to just one account, and you have like 10, 11 accounts rotating, you are most of your accounts, like it's basically 7 out of 9 of my accounts are positive, right? Like the thing that you're really focusing on is not the win. The win ratio is important. Don't get me wrong. You want it to be positive. But what you're really focusing on is the win account ratio. Because if at the end of the day, you're 7 positive to 2 negatives, what do you care? The thing about prop that's very unique, and that's why we can exploit the model, is it's a very asymmetric model. Think about each account has let's say a $2,000 loss and a $3,000 target, right? So you have a $2,000 budget in each account, right? However, your actual cost of that $2,000 loss is just $100, right? Because that's what a prop account costs you. So if you were trading real accounts, yes, then you really want to be perfect on all of your P&Ls. But in this case, even if you burn 3 accounts, you've only lost $300. Whereas if you win 2 accounts, now you're up $1,000, on the $3,000 target, and you have a fully asymmetric bet to the structure. Here we go. And that target does 3280. That's right, 3280. That's it. So that's the interesting insight. Good for you. All right, Tim. I took the full 8 points on that trade. I was just stayed patient enough to take it for once. But yeah, you see what I'm saying, Dr. D? Yeah, the hack is not in the win rate. The hack is in the win rate across accounts. I don't even know how to express that. It's in the portfolio win rate, not in the individual trade win rate. Because diversification buys you enormous amount of benefit. In the most basic statistical sense, there's something called variance. That's like how much volatility you can have in the account. Let's say, I don't know, if you're trading like I am, you could be up 100 and down 400, right? Because and normally within the proper parameters of your trading, just because you hit a couple of negative trades, right? Well, if you do the exact same strategy across 10 accounts, your variance goes from like minus 400 to like whatever is the square root, like divided by a third, right? You basically only have like a third, like a minus 175. So your net loss per account within the regular distribution of your trades becomes so much more muted, because you're distributing trades across all these accounts. That's like, a statistical value of the thing. But honestly, the single biggest value of rotating accounts, there's the other really, really big value is on funded accounts. Everything is designed. If you look at the funded models across every trading prop, every trading prop designs their funded model for you to blow it as much as possible by trading large. Anytime you trade large within the funded model, it's almost guaranteed to stop you out because of the trailing drawdowns, because of the other stuff. But it's also, and this is the other thing, is it forces you to trade within those accounts because of minimum day requirements, and because of what is the word, dormancy. Like if you can't keep an account dormant either. So what they're trying to do it from both ends is to make you lose by making you trade a lot and by making you trade large. So the way to combat that is to trade a lot super small. This way you completely fulfill all of their daily trading requirements, but you never ever come close to getting margined out or DLL'd out or any of those structures, which are all designed basically for you to take one large trade and lose. You can go up to target and take one large trade and lose the whole account, right? That's basically what they're counting on. They're counting on you tilting every fucking time. And you will, because the rules are designed to kind of entice you to tilt. So rotating absolutely destroys their primary statistical design, because it makes you trade, it makes you fulfill all of their rules without ever even coming close to triggering the drawdown limits. And then the other thing that it does, which is frankly the much more important part, that is not statistical but is actually behavioral, is the single biggest reason for why people blow up their accounts is they add to losers. And they add to losers in two ways. Either they add to an open trade, so they add to the position through an open trade, or they get stopped out and then they size up. Sizing up after you get stopped out is the same thing as adding to a loser. I know it doesn't sound like it, but what you're doing is you are increasing your risk without any reason to do so. Statistical reason to do so. It's still statistically negative against you. You're just trading with bigger risk, right? So those two things are super, super easy for the prop firm to entice you to do. But if you are rotating, like if you make a trade and go to the next account, there's no possible behavioral way for you to add to a loser, which is an extraordinarily powerful way of helping you not tilt. Right, exactly. It's really the only anti-tilt method that that exists. Oh yeah, new traders should definitely not do copy trading. We've been trading prop forever, and I still don't copy trade. Copy trading is the perfect way. They want you to copy trade because, again, it's a perfect way for people to blow accounts. All you're doing as a copy trade is amplifying their methodology to blow accounts. Now, don't get me wrong. Like everything I'm telling you has to do with holding on to payout accounts, the real money, what I call the real money. All the rules are actually flipped the other way when you're doing evals, especially like with our friends at Apex, where you can do one and done. You can do one trade and get yourself, like, if you're when you're trading for an eval account, the only thing you want to do is pass it quickly. Now, some of the firms actually make it very hard to pass it quickly, and those I find I don't like to trade with those firms because they're making it double more difficult. They're making it more difficult for you to pass the eval and then get to the funded stage. So they're gating you twice. It's like double taxation. With Apex, what's really, really great and why I love them is the accounts are dirt cheap. As I was telling you guys, this is my two favorite accounts. There's two ways you want to go with Apex that you want to buy them. First of all, you absolutely want to buy the 50,000. That is the gold standard of the account, both from risk reward, cost basis, and everything else. That's the sweet spot on the account. You buy buy the 5-pack for $19. It's a super good deal. And then you can just trade one and done. So you could just trade one big trade, get it funded, one big trade, get it funded, burn a couple of accounts, get it funded. What do you care? Your only purpose here is trade large and take as many risks as possible, because your only purpose is to get to the destination. Once you get to the destination and you're trading with real money, then it's a completely different ballgame. It's what I do. You go completely the opposite way, because if you're spending 2 months trying to work your eval account to target, you're just wasting time. I mean, it's fine if you're practicing your techniques. Oh, hang on a second, guys. Do we have a trade here? I'm yapping. We have a trade. Which account am I in? I want to go to 70. I want to go to 80. I want to go to 80. And I want to be, we have a trade off the London low. So let's just trade, and then I'll talk a little bit more about the best accounts. All right, I'm in the trade. Another big bounce off London low, but let's see if this one holds. There's a big bounce. The proper stop here is really way below here. But you know what I'm going to do? I'm just going to take come on, baby. Yeah, I'm going to just take a quick scalp here. Not because I have to make a judgment call here. Do I really want to have a very, very big stop and a bigger target? Or do I just want to take a quick scalp here and talk about what I want to talk about, which is the proper sizing. So these are really, really great for have a hunch, bet a bunch type of accounts. These are great if this is the 50,000. If you are really good at these, have a hunch, bet a bunch, because this is super cheap. All you pay is 49, and when you get to the real funding phase, you don't pay any more. With the other accounts, you pay like 19, and then you got to pay an activation fee, so it costs you a little bit more. The advantage of the other accounts is you can burn 10 of those accounts for $19 and still not come into the to the full price of this. So experimentally, I recommend the standard accounts. Experimentally, I recommend those. But once you kind of get good, you may want to get the note activation funds, because these are super cheap on an all-in basis. Like the total cost of ownership here is literally 35%, 1/3 of what it costs you, if you were to go the other route. So it's really, there's nobody in prop business that's as cheap as Apex on an all-in basis. But regardless of how you want to do it, the point is, when you're doing funded, when you're trying to just get the account funded, the one and done trades are the really, really good trades. And I'm happy, I'll show you a couple of one and done trades you could have done. I suggest Max, it depends. If you're trading like me, which is scalping, I suggest intraday trail. If you're doing much more positional trades, then you may want to do end of day trail. I pretty much always go for intraday trail, because I'm never, especially with this rotation strategy that I have, I'm never going to I'm never going to even come close to intraday trail. No, I multiply. Just buy multiples because it's just much easier. Because you trust me, you're gonna buy one, and you're gonna buy the second one the next day. You're gonna blow accounts. You just want to have a few of them. Also, having multiple accounts keeps you don't just you blow one, you buy one, you blow one, you blow. When you have 4 or 5, if you make a mistake in one account, you can just go to another account. You don't have to destroy the account right off the bat, which is what everybody always does. Well, Rochelle, if you trade with us, you'll see that unfortunately, this week we don't have a lot of news flow trades. What we love to do is we will do something called the news straddle, where we will be like in front of the news, and we'll take one, for example, in gold and one in NASDAQ, opposite directions, and usually one of those obviously hits the target, and we get it funded in one trade. But what I was going to say is within our BK dot structure, there is one trade that I would do every single day. It may take you 2 or 3 times during the day, but you're almost assured to do a one and done, which means pass the account in one trade, or at least maybe get the account 2/3 to target in one trade. Let me show you. And that is basically, I'll show this to you. It occurred yesterday quite well. I'm just going to go back in time here to show you. You want to start for that one and done trade around 10 a.m. New York, right? And it's essentially the reversal off the key level trade. So let me show you where those trades. So we're gonna go back to 10 a.m. New York. I'm going to show you how you could have made that trade. I'm going to go to replay. So I'm going to walk you through like candle by candle, right? Excuse me. So we're now in New York trade. I'm going to go candle by candle. Here's London low. Here's London low. London low, right? I'm looking for a bounce off the level. Okay, my first bounce off the level. The bounce off the level is demonstrated by session level and a green diamond trade. So I'm long here at 632. Okay. And the ratio that I would go for would be 3 NQs, 3 big, large NASDAQ contracts. Each NASDAQ contract is 20 points a trade. So if I go 3, that's 60 points, $60 a point. I need to make 3,000 points. So I need to have a 50-point target. So I'm at 637. I need to do 687 as my target. And the maximum I can lose is at 2,000 divided by 60, 33 points. So if I get to 600, I lose the account. If I get to 680, 681, I get funded. Okay, let's see what happens here, right? So I'm in here. If I get to 600, right, and I get stopped out, fine. So I lose the account. Let's keep going. So that's your first attempt. By the way, even though this is your first attempt, you have a second diamond. You could come right back in at 630, 638. Again, targeting 688. And on the second trade, on the second account, you get funded for a full account. So this zone between 10 and 12 noon is a very fertile zone to get. You can now remember, if you're spending $19 for your funded account and you have 2 accounts, boom, you're funded. Even if you spent $49, you're funded. You're funded for $100 with real money account, and you're done. But let's keep going because I think there's more opportunities as we go here. So here's New York lows. Here's London lows. Make fresh New York lows. 11 o'clock. Remember, we're looking for trades between 10 and 11 when they bounce off levels, right? So here's a potential trade here. We have a New York low. We have a green reversal arrow. Again, I'm going to take same structure, 3 NQs. In this case, it's 550. So I need to go to 560, and my stop would be 520, right? So let's see if this plays out. Nope, I get stopped out. Fine. And sorry, and here's the secondary trade. I just keep I keep missing. Here's a secondary trade where I'm at 545, right? And I need to be at 595. I'm right here about 20 minutes later. So if I sort of use cheap accounts, $19 accounts, I burnt $40 to get one funded, and then I burnt another $40, and now I got two funded. Now I'm two funded in one day, and I'm pretty much done with what I need to do. And now I can get serious about trading the payout accounts, which is where the money is at. So you could absolutely use our structures, because the whole thing is finding the bounce off the lows or finding the bounce off the highs, where you have that asymmetrical bet. And that happens all the time, because what do you need in order to get funded? You need the product to move unidirectionally in one direction for an X amount of points. In this case, the 50 points is a very reasonable amount of points to move to get there without retracing. And there's no better place to do that than off the lows. We just recovered the VWAP. Had I stayed in this trade longer, I would probably gotten the full P&L. Anyways, all right, I'm going to rotate accounts. We're going to look for more trades. I'm going to go to the 85 account and see what's going on. But you get the idea? Yes, you can pass the Apex one trade. No, yes, exactly. That's why it's such a perfect strategy for Apex. Apex is very liberal when it comes to passing accounts, and then it gets a lot more conservative in getting the payout accounts. So you absolutely then you change your rules 100 different ways on the thing. But that's the whole aspect of it that makes it so cool. That's what makes that's how you could really optimize your system. The idea is to just get funded fast and then get paid out slow. And everybody kind of does the opposite. They sort of work their way to getting funded slow, and then they try to get paid out fast, and then they'll get burnt up. That's the number one way that psychologically the prop firms get you. So we're holding bid. Overnight, let me just see. I haven't even looked at the. Let's see what the 10 years. 10 years down. Thank God it's now down below 4.7. Gold, on the other fucking hand, is up above. Oil is above 85. So that is the thorn in everybody's side, right? We need oil at 80 in order for us to have some breathing room. And oil at 85 is very negative because it forces the Fed to consider rate hikes. So we need everything in our power to get oil down to like 80. That's really the dominant input on the macro side. All right, I have a positive scalp structure here. Give this candle its completion. Where am I? I'm at 85. I'm in the 85 account. Okay. Rachel, I actually want to do like starting next week. I want to do a lot of one and dones. Like I want to hang out from 10 to 12. Maybe create a special trading session next week, the 10 to 12, where we try and do one and dones. Oh, I gotta buy. Am I in? All right, I'm in the trade here for the positive scalp. Now, for those of you who are not familiar, the neon greens is the strong confidence long, right? The regular greens is the medium confidence long. So this is strong confidence long. Let's see if it works out for us. its first scalp signal in what's that? 6:21, 20 minutes. See how it plays out. Next level up for us is Tokyo high, so quite a way at the 600 level. Good morning, everybody. Who's new in the room here? Come say hi to me if you guys want the free giveaway dots PDF. I just put the link in there for you guys. If you want to watch the whole playlist I made on the whole dots indicator, here's the it's a private playlist you can watch. Yeah, I'm gonna try. It's just I can't promise, Rochelle. It's a thought in my head. I gotta get Kathy off my back and clear my schedule. But maybe I'll do it because what I really want to do is like a Tuesday through Thursday, like Tuesday, Wednesday, Thursday, one and done experiment. We're gonna call it the one and done experiment and see if we can hit a couple of trades that way. But yeah, I mean, I think it'd be great because people can actually see how those structures pop up. Yeah, I'll let everybody know. So we have this always creates a little bit of conflict in me because we have a strong buy signal immediately reversed by a red arrow telling you, it doesn't look like it's working. A traditional way that I kind of handle this, which I'm probably going to do right now, is I'm going to rotate account to the 86 account, 84 account, and join ask. See if I can get in there. No, maybe I can't. All right. So I'm short in the 86 account, and I'm long in the 85 account because I have essentially contradictory signals, right? And we'll see which one plays itself out. But generally, I ignore the red arrow when I have super strong, confident trades. But this looks a little weak, so I'm actually taking. It's sort of a secondary trade here on this play. Let's see if it works out. So this is my long scalp position, targeting 562. Market very quiet. It was really settled down. What time is it? It's almost 7 o'clock. It's almost 7 o'clock. How's gold trading today? I haven't even looked. Very quiet too. Gold's still struggling with that 4,500 level. No, I don't trade the DAX. The DAX is very similar to NQ. It's just not as liquid. and it's also it correlates a lot to NQ a lot of times. But it's not that we can't trade at that. Well, first of all, I think we can't because it's a separate fee for Apex. So they don't let you trade at DAX. But the more important part is I'm a huge believer in trading one asset. When you're scalping, you really want to be focused on trading one asset as a skill set. So I am if I go into the 84 account, you see my, I'm holding basically a short against this red arrow. And we're stuck in no man's land here. Yeah, we're like stuck in a 5-point range for the last 5 minutes. So the short, the short came in. So I'm actually going to get rid of the long. Even though it's coming back, I'm just going to get rid of the long, flat myself out. Wait, hold on a second. Where am I? 85. Get myself out. Okay. And just close up all the freight trades. Okay. So we're kind of holding around VWAP. We cleared VWAP, came back down to it. London low underneath here in the 500s level. Market generally looks, pretty weak. ATR stands for average true range, and it basically tells you what is the average size of the candle over the last 14 candles. So in this particular case, the average size is about 7.5 points. That's very, very small size, right? And this is a $30,000 product, and it's only moved about, it basically tells you it moves about 7 to 8 points during the 1 minute period. So it's a very, very important measure. It's probably the most important measure for us in terms of all of our inputs, because it tells you just, how much movement is possible within the environment. And a lot of our proprietary triggers are based upon taking trades when the climate is calm, when the ATR is very, very small, because from calm environment you get big breakouts. When you have big breakouts, you generally have far less possibility for further breakouts. So it's just important to note that as we go forward. So you can, the easiest thing, if you have a question, this is what you need to go. You need to go to Gemini, because this is free and it's very, very good. And you can just ask it, what is ATR? And it will explain it. Like any question in the world you have, any search you have, it will explain to you exactly what it is. And then if it's, if the math is complicated and you're like, what is this? Explain in layman's terms. And you don't even have to type, like I can't type, and it will understand your typing. Think of ATR speedometer for price movement. It doesn't tell you where the price is going, up or down. It just tells you how wild the swings are right now. High ATR, the market is in a roller coaster. Low, market is moving in a crawl. Imagine NASA with ATR of 5. On average day, it moves up and down by about $5. If you set a stop loss only $1 away, right? No normal day noise. So this is where we actually use it for our stops and targets, right? Setting stop losses, adjust your stop distance. Want an example of sizing trade using ATR? Yeah, whatever. So like to sort of show you one of the reasons why, when I'm scalping, my stop is 20. That's basically twice the average size of a candle. So I don't get caught in intra-candle noise. That's what ATR does. But generally, if you have any question, but specifically any trading question, any prop firm rule question, anything on your mind that you want to ask, the best thing to do for like general purpose AI is just simply go to Gemini. Free. It uses your Gmail account. You can use it for search. It's really good. They should hire me as their spokesman. Obviously, I use Claude for all of my stuff, but that's a much more advanced AI. And for those of you guys, by the way, who are interested in coaching, we're almost I should be ready by tomorrow. I'll have the coaching landing page. You can get it. The coaching is not going to have the next session of coaching is a week from this Saturday, so you can sign up. And obviously, you're going to get a chance to learn about all those things in coaching. In coaching, we develop unique strategies every single month. We actually developed one last week that is really, really good, like shockingly good for FX. So the whole idea of trading with coaching is that once a month we develop a new strategy. You get to keep it forever, and you can use it for all of your other trading, which is really cool. Good morning, everybody. How we doing? It's Wednesday, a very quiet day. We're crawling towards the Globex low right now, and retesting at London low at 29.5. Now, 5 will get you 10. I will be shocked. Not the first time that I've been wrong, but I'll be shocked if they don't blow that 500 level, meaning that they're going to take the 500 level down. It's held once, held twice. I have a sell signal right now, which I'm going to take. Actually, I have a sell signal in the trade. I'm going to join Ask, see if I can get into the trade. Oh, I'm in the trade. Okay. Ooh, it went fast. What happened here? Well, which account am I in? 85? Oh, I'm in the wrong 85. Sorry, I'm in the pay. I'm always in the wrong 85. Okay, so I'm in this account. I took this sell signal. Let's see if that's going to work for me. And we're done. And now we're bouncing off London lows. And I'm just missing this account. Missing this trade. Sorry, guys, I'm not paying attention. Join bid. All right, I'm in the 84 account. Oh, wow. What's going on over here? 7 o'clock, 84 bounce off the lows. I'm just gonna take this scalp up. No, that was 7 o'clock. A lot of times on the 7 o'clock hour, New York comes in and you get this big candle. A lot of times you get a big reversal candle. For this actually held London low, right, at the 500 level. So I took the short over here. We made money on the short. Then I took a long over here in a different account. I made a little bit of money on the long. And now I'm actually going to go to my 85 account and try to nurse that one. It's going to be my next trade. So both trades worked. The short over here worked. They tested the low again and they bounced really hard off of it. And I just got to, I just wasn't paying attention. I got a bad fill. Sorry, I'm distracted with some analytics here that I'm doing in the background, which I'm going to stop doing. Yeah, I mean, you could say that, Sandy. I never thought about it that way, but you could kind of say that I'm kind of scalping the ATR. Within approximate reason. I'm looking for the 8 points. Yeah, I'm looking for 8 point profit. Yes, it's an interesting way of looking at it, but I guess you're right. And obviously, when you're doing positional trades, which are larger and bigger stops, you should be going for more. Probably if you want to kind of normalize, it's a sort of an interesting way of looking at it. Probably on the positional trades. So let's let's kind of think about this. So I'm basically 2 ATRs on the scalps at 1.1 to 2.5. 1 to 2.5. And on positional trades, I probably should be like 3 ATRs. If you do 3 ATRs, let's say that's a 25. So like I'm here. I'm just going to be here. 37. Yeah, it's 30.32. Yeah, it's pretty much 3 ATRs, and you should be looking for like about half, 1 to 2, 1. Yeah, it's. I guess if you're gonna kind of normalize it, let's say the positionally. So uh, on scalping, I'm 2 ATRs. Let's say ATR is around 8, and I'm 20. Let's say ATR is 10. Just we're gonna use a round number. ATR is 10. I'm minus 20. So 2 ATRs, and I'm targeting 8, which is 1 to 2.5. And on positional, I should be 3, which is 30, targeting like a 12. Right? That's pretty much right. So you're at 71% break even. If you want to think about it in normal layman's terms, what do I need to do to break even? What do I need to make money? 71% break even. That means 7 out of 10 trades have to win just to be break even. And 8 out of 10 trades puts you in a nice, fat, profitable, margin. That's kind of how you want to be thinking about this. So yeah, I mean, I think those are fair shortcut numbers. If you do that, it makes it much easier to normalize for volatility conditions. So if ATR is 20, you're scalping with a 40 stop and like a 18, 19 target, 16 target kind of a thing. Yeah, it makes perfect sense. Yeah, the indicator works very well on the ES. Just ES is not as volatile, but it works the same way on the ES. I mean, if you want to see ES, I'll show you ES. God, I don't even have the ES one here. Let me add here it is, ESU. Here we go. Here's the ES. You can see that on the ES the bounce was off the VWAP, and on the ES, here you have ATR here. So just think about this. Here it's 1 point, right? 1 point, and so our stop would be 2 points, and the target would be 3/4 of a point. That's what it would be on ES. It's just a much less volatile product, right? But same idea. You could absolutely do that. Just ES is a very thick product. So like here, let's say I come in at 711. My stop is 13, and what is it, 711.50, and my target would be 10.75, and here's my target, and I would get done. It's just incredibly more boring to trade ES than it is to trade NQ, so we don't trade it. But very legitimate product for sure. Wow, we bounced back. Look at this. We definitely held. Somebody held that 500 level with quite a lot of conviction. I'm going to try and get long here. I'm a little bit late, but let's see if I can get long this green. I just missed the trade. Let's see if I can let's see if the bid gets me in. I'm going to sit on the bid. If it goes away, it goes away. It goes away. That's it. We're done. No trade. I wanted to get long here, try to get cute, and it just ran away from us. That's fine. We'll take the next one. We're actually pretty good on. I think I only had like 1 loss out of. God, I don't even know how many trades we had. I'll have to look. Let me look and see what the first hour numbers are. Two, 3, 5, 5, 1, 6-1. 7-1. Yeah. Yeah. We're 7 for 8 so far. Not bad. But it's a good question, Sandy. It was actually a really good question. All right, so now we have a second chance to kind of get long here. But this is a very interesting thing. This is a long signal against a negative candle. So we're really going to make this leap of faith that it's a buy to dip trade here on the 85 account, which I'm going to try and get. I'm going to get into the trade. I got into the trade a little too early. Let's see if that's going to work for us. So again, I'm just making a leap of the leap of faith is not working. It's really, really turned negative. Okay, let's see if it's going to. I bought too early. I was trying to get cute, and this thing went all the way down to the bottom. So I don't think this scalp was just badly executed. It's probably not going to work. But the idea here is that you're trusting the neon greens more than the light pinks, and in this case, they may have lied to you. I also should have just waited. Had I waited on the low, the trade would have been fine. I could have bought the 45s and be out at 52s, but I bought way too early. So now I have both like bad execution and relatively weak trade against me. So we'll see what I can do here. And I'm just going to get out. Even though this is going to work for me, probably going to work for me, since I made bad execution, I have no right to be in this trade. I'm just going to scratch myself out for a tiny little loss and regroup. But had I bought properly, if I bought 545, it went all the way up to 54, would have been an easy scalp for me. So this was just a right idea, bad execution, which happens. And that's the beauty of trading small size and trading multiple accounts. The errors are minor in the grand scheme of things. All right, let's go. We're going to go to the 79 account. And trade that. See, had I waited patiently to buy here, the pop would have been right then and there. I always tell myself, trust the process, and then I never do, right? That's always the Achilles heel of all of our trading. Fortunately, when I make mistakes with this particular structure, it's tiny. But it's amazing how, like, even though it's supposed to, you know what the logic is and what you should be doing, in the heat of the moment, you're still like, no. I can't believe it's that. Because the idea here is that this is a big sell-off, but the overall trend is very bullish. So the probability that this is actually buy to dip is much stronger than it is, sell the rip. So buying a dip here on a scalp basis would have been a good trade. So DRD, you are actually using like dynamic stops and targets. You're just using ATR target and ATR 2.5 ATR stop. Is that what you're doing? So for argument's sake, if ATR is 10, your target is 10 and the stop is that 25? Just as an example trade. Okay, it'll turn it off. So that's perfect. So DRD actually is doing a much better job than I am in a sense that he's being very precise. He's actually using the input of ATR to create dynamic stops and targets. I'm just too lazy. I have everything preset, and I'm working with you guys. Maybe if I was on my own and was really working the thing. Okay, let me see. Do we have? I want to buy this. Oh shit! I just missed it. Fuck! I'm yapping and I'm missing trades here. This was a buy to dip trade also right over here. Where am I? I'm just gonna get out. Oh, come on. Sorry guys, I'm yapping. The trade should have been here at 45. It would have been a good trade. Again, I'm missing my executions. That is the one very important aspect of our trading that that is very difficult, and I'll be the first one to admit, is that you got to be focused and you got to just be there at the second when the candle closes to get the execution, because you snooze, you lose. And if you're yapping or you're paying attention, you're really messing it up, which is why obviously the level session trades are much more forgiving. Like the scalp trades are utterly unforgiving. You fuck up the execution, you pretty much fuck up the trade. You don't always fuck up the trade, but you fuck up the execution, you put the edge against you many times. With the session trades, it's much more leisurely because you have a much wider field of play. But what DRD was doing, which is really cool, is he's just actually taking the pure ATR reading. So let's say this is 11, be at target 11, stop 26. He's actually doing precise. I'm just doing much more of a like 8-20, general zone fixed stop and target structure. But he's actually widening and expanding it and contracting it based on the actual latest reading of ATR, which is probably a much more precise way of trading. He's probably getting a better rate of return doing it this way. But you don't have to be perfect to achieve the results. That's a bummer. So the trade also turned over here. As you can see, it turned red. The bounce back was kind of relatively weak. The slope here is negative. The 8 SMA slope is negative. We're clearly just having a hard time clearing this 550. Excuse me. 550 level. We're basically trading 500 to 550 and trying to have a hard time clearing the 50 level. So just very sloppy, choppy action. Oh, God. Sorry, guys. Why there's two triangles? Purely cosmetic, to show you this is a scalp trade. Kathy wanted me to do that so that's intuitive to you that this is a fast scalp trade versus a more leisurely positional trade with diamonds. It's just supposed to make you understand that these are scalp trades, just visually to differentiate this. Do you get the differentiation? Oh. So this is an interesting thing. Like I'm at 79. Let me go to maybe 78. I'm just so this is a second signal, which is like you kind of doubling up on this trade. But I'm just since we're trading small, I want to see if I can get a better entry, better exit on this thing. Let me see. Join bid. Did I get done? Oh, no, I did not get done. I was trying to get really cute on this trade. Ah, damn it. All right, I'm going to get out of this. Not a trade here. So what I was saying is I had a signal here, still floating that, and I had a secondary signal here. So I could have taken that in a second account. I was trying to get cute and try to buy down bid. Should have simply come in market at 538. Would have been an easy trade. As it stands now, I'm just on the 79 account, still floating this trade. price action is very tight. So you kind of have like all these multiple repetitive signals coming up here. Yeah, I'm going to get out. I'm actually going to change my direction. I'm going to sell market. Uh, I'm selling. Oh, I'm in the wrong account. I'm in the 78 account. Okay. Wasn't. Shit, that was so fast. I changed direction in the 78 account and made money. Sorry about that, guys. It's hard switching accounts here and showing you exactly what I did. So this trade just wasn't working. It gave me another red arrow, third red arrow in the world. So I stopped myself out and reversed and got this account done. Okay, so I'm at this point. I am 9 accounts. 6 accounts are green. 2 accounts are mildly red. 1 account is essentially scratched, not barely red. So not bad. The point being is that all the red accounts are within one trade of turning green, right? That's the whole point. If you're trading small and you're trading consistently, you're moving the whole portfolio forward, and the ones that are lagging are very, very easy to make up. Very easy to get them to green. Yesterday, I took all my accounts to green by the end of the day, and they were like this. They were like two or three reds, and a few for green. So we're going to take a tiny little break here, and then we're going to get ourselves. I think we're going to get ourselves ready for Ola. So I'm going to probably transfer over to start trading Ola accounts. So Sanity, did that make sense on the 2 triangles? Are you clear on that? Big burst up. Nice big burst up. I'm still trying to see. So this is VWAP. This is interesting. This is worth a shot here. Let's go to 79. All right, I'm in 79 account just to kind of show you what am I doing here. I'm in the 79 account. There was a diamond green volatility breakout off the VWAP. That is essentially, level session hold. Like VWAP is one of those levels that we take seriously. So if they held and they popped it up, we want to try and trade this long because there's a probability that this is going to extend higher to the trade. So I am in the 78 account trying to see if I can pop this up on the move. Price action is so tight that it's almost hard to see all the signals. I'm going to expand it. You can see the green triangle here, the VWAP here, I'm long this on the assumption that we have some extension here to the upside, that they like the levels and they want to take them higher. And let's see if I'm right on this. There we go. There we go. There we go. There we go. Come on. All right. I'm going to take this. I'll take it early because I want to go get a cup of coffee and I want to watch it. But this is, again, kind of showing you the best of level session trading and taking me up. So good. All right. So that willows down the negative even more. Let's take a couple minute break. I'm just going to get a cup of coffee. And then I think we're going to reconfigure ourselves to Ola and then trade Ola across like a multiple amount of structures. Okay. And then have Sam come in and help us trade Ola on the volume. He's going to have some really interesting insights about trading Delta and see if we can. My whole view is that I'm really fascinated to see if his signals are going to dovetail with my signals on level session highs, lows, and if there is the same kind of dynamic where he sees a change in volume and I see change in price, so that we can confirm each other as we trade. So that's going to be coming up in the 9 o'clock hour. But we're going to switch over to our friends at Ola right now and say goodbye to our friends at Apex. As I said, the best deal on Apex is all of these one-time fee, which is really, really cheap. You just pay this once. That's it. Once you fund it, there's no additional fee. Or if you just want to take the cheapest possible, highest, easiest risk to trade, in the sense that if you burn it, you don't really care. $19, the $50,000 account. This is the account that I trade, the $50,000 account. Really good one. You can trade end of day or intraday. If you're trading like me, intraday. If you're trading more positionally, end of day. It all depends on what you want as a structure. If you're scalping like us, this gives you the benefit of the full drawdown, no daily loss limit, and you never come close to hitting the trail, because we're always selling at the top or buying at the bottom because of the scalping nature of our. We don't let any trade go against us off its highs. So for us, this is not a negative. For people who are positional trades, this is a negative thing. So depending on how you want to do it, but these are the best accounts. And as I said, next week I actually we're gonna do a whole bunch of these. We're gonna buy the 5-packs, maybe even 10-packs, and just try and do a one and done. Just pass the account in one trade without relying on news. Just relying on our indicator. And trading dots with one and done, which would be a lot of fun. Okay. Okay. So let me switch views here for just 1 second. Hang on. Okay, cool. So we will switch views here. This is just show you. You see how tiny little reds, all of these will be converted to greens by the end of the day. And what you see is that the whole green part of the portfolio just keeps getting bigger and bigger and fatter and fatter and fatter. And that's just, an hour's worth of work today with you guys in trading. So we're going to, hang on a second. Let me just move this over. We're going to change this to Ola. Get rid of this. Just got to rearrange the windows. Just bear with me a sec, guys. All right, we're going to log into my Ola accounts. Okay, we're not in Ola. Oh, shit. God damn it. I'm on the wrong account. Okay, let's try one more time. All right, cool. We got the Ola accounts working. And I'm going to set this up over here. Great. And then we have, and I just want to try one more thing, guys. Just bear with me. I want to see if I can show you. Okay, perfect. Perfect. Okay, so you can see the CFD trade. For those of you, as I said, this is the easiest, best thing to do if you're trading CFDs. It's an absolutely free trading applet that I made for you guys that you can get from this. It's Prop Trader Edge Tools. Prop Trader Edge Tools. Just go over here. Let me give you the link. It tells you all about what. Oh, you guys don't see it. Prop Trader Edge Tools. It tells you all about everything that this applet does. It does a million things that you're going to be very, very thankful for when I give it to you. It's totally free. First of all you got to do is just simply have an account with Ola, but it allows you to buy, sell with an app, with a stop on a target preset. It allows you to have hotkeys set up. So if you hit the S key, it will automatically sell. If you hit the buy key, it will automatically buy. If you hit the R key, it will stop and reverse. You can modify. If you hit the X key, it will instantly get you out of a trade. All things that are super, super difficult to do on MT5 that are now just one key away. And it's, as I said, it's completely free. If you have a MT5 CFD account, all you got to do is just, if you already have an Ola account, you just simply take a screenshot of your purchase, put it in here, and it will take you directly to a free download. If you haven't done one, go buy it with our code PTEdge. And I think our code is Edge. With our code Edge, and buy it, and then you're free to go. So if you're trading CFDs where Ola really, really excels, it's a super cool tool. And I'll show it to you later today when Sam comes on. I have a lot. I have a lot of accounts. Yeah. So anyways, now we are going to take signals off our Ola Prime futures. Because Ola trades both futures and CFDs. So it's really, really cool. So we can trade them both. And we will take accounts there as they come. Matter of fact, we have like a sell scalp account here, which I'm going to see if I can get into the trade. Just missed me. Come on. I'm trying to get a good price on the fill here. Come on, baby. Sweet. All right, we're in the trade. I'm going to turn the music on. I'm going to let this trade on. I'm going to get a cup of coffee, and we'll start trading Ola for the rest of the time. All right, I'm back. Trade worked, nice and clean. We're basically back to the 500 level, right? It's the 550, 500 level. So far, the bounces have been just perfect. We've been bouncing off the 500, taking trades there, and then taking anything that shows weakness the other side to the downside. But this little churn is going to end one way or the other. I still think they're going to try to break the London lows, but we'll see. We'll see. Macro picture right now is where's my macro picture right now showing oil coming off the 85, 10-year still pretty much flat. Let's see what the market wrap has shown us. Actually, you know what I really, really love? I really love this version in Telegram. I love my Telegram version because this comes in at 7 o'clock and gives me a full summary of this one. Full summary of today's events. Let's see what it's showing today. I love getting this like in my inbox. So chip route spreads globally. FOMC minutes due 2 p.m. Yes, that's the big event today. S&P Nasdaq drift marginally lower. 10-year yields slightly. W gains nearly 1%. Yes, correct. All good stuff. I mean, all true stuff. And Washington's prolonged blockade on Iran and tanker exports. Gold slips fractionally. U.S. Iran conflict with no ceasefire progress and let declines to resume talks. FOMC minutes from July 28th. 3 dissenters voted for 25 bip hike. Gave no right path. Market odds for September hike have slid to roughly 30%. Right. NVIDIA, Meta, Tesla all getting chopped. Beat 2 estimates before the bell, providing a modest early drift. Okay, that's all pretty good. Gives a really, isn't this a good summary? Just gives such a good summary of everything that's going on here. Euro dollar slightly up on the FX. If you guys are following FX, I certainly don't follow it anymore. So calendar, what do we have here? UK CPI came in essentially 2.9. So in line. FOMC minutes at 2 o'clock. These is lower estimates, blah, blah, blah. Yeah, nothing but the FOMC minutes. Everything else came in here. It also tells you, like, if you're trading FX, tells you all the macro data, right, over here in the thing. It's really good, right? Like, it's a really, really full summary of the macro stuff comes into your Telegram channel right away. I really love it. But really nothing much new, you know. So I think it's going to depend a lot on whether investor sentiment cracks. If we kind of crack below this 29.5, because we did test it yesterday, came back up above it, but every rally has been weaker. Like, it just hasn't reached higher highs. It's been reached lower highs. And I'm going to talk to Sam about this today, because I'm wondering if we're starting to really go into that August NQ slide, where we could eventually end up at 28,000 by the end of August, as NASDAQ slides like 10%. So I'll be interested to see what Sam has to say when he comes in a little bit later today. Who's new in the room here? Who wants me to, while it's kind of quiet, wants me to explain the basic meaning behind the signals or the symbols on the chart and what they're telling me as I trade? Give me a +1. Let me know. Mark, you're not new. You've been around forever here. No, I only want new people who've never been in the room. All the people I see, there's familiar handles. Nice, I will tell you, but great again. Okay, you're new. Where are you from, my friend? Who else is new? Who wants to know the secret sauce here? Coming into London lows, by the way, guys, as I kind of thought. I think we're going to test that 29.5. I'm watching this pretty carefully here. Malaysia, wow, nice. Wow. Is Malaysia the one that has like a million? No, Malaysia is not the one that has it's Indonesia that has the 10,000 islands, right? And Malaysia is next to Singapore. We have a short signal here. Short signal near London lows. Legit trade. We're going to try and take it. We're going to try and take it here. 35 seconds left. We're going to wait for it. So these double triangles is a scalp trade. If the triangle is neon red, that's a high confidence scalp trade. But you know what's happening here is we're getting these contrary signals. No, we're actually not. Wow. It's interesting. Like for a second, we had a bounce signal as well as a scalp signal. Sometimes we get both of those signals at the same time. But now I'm just going to sell this. Legit scalp sell signal. Let's see if it works. Again, this is the market testing the 29.5 level, and the buyers try to pump it off the 29.5. The sellers brought it back down with the sell signal, but we're clearly getting. Yep, next to Singapore and Thailand. Yes, exactly. Well aware. So we're getting effectively kind of contradictory signals, which occasionally occurs, especially in a low volatility environment. This was a high confidence sell signal, immediately reversed by a possible buy bounce reversal. And we have to decide which one we want to trust more. Now we actually want to I'm going to wait. If this holds, it's probably worth it for us to reverse ourselves. Very whipsawy action right here. All right, I'm going to reverse myself the other way, just to see if this, because they seem to be stubbornly holding this 29.5. So the fact that they kind of were to reverse it tells me that I probably want to be on the other side of this. But this is a kind of two-way price action that can easily whipsaw around the line, which is why we trade very small. And you have to be fully prepared to accept the fact that you can get whipsawed, short signal, long signal. Both of them don't complete, and you kind of change your mind for it for nothing. That happens occasionally. You have to trade small, or you can just simply stand aside. I'm just, I'm taking the trades here with you guys because I want to take every legitimate signal I can. But you could, when you get that kind of a up-down, bipolar structure, you could just stand back. This was a clean signal to the sell side. There was no greens in between, right? You just stayed there. You stayed patiently until the trade resolved. Those are the trades that are perfect. But you will get these seesaw trades, of course, and you have to just accept that that's going to happen, part of the trade. I took it out quickly because it started to wane. because I didn't want to get seesawed the other way around, which is exactly what happened here. So short trade, long trade, now finally breaking the lows here. So if this stays negative, I'm gonna sell this. I'm gonna take the directional cue from this short side, but I'm waiting for the candle to close before I commit to the short side. I want to see it hold that diamond. The diamond tells me it's a volatility breakdown. See, it goes away. And that's why you wait for the candle to close. Nobody has the dominance right now, and until somebody shows me some dominance, I don't want to follow them or control. So there are, for those of you guys who are new to the room, just want to let you know, first of all, if you're new to the room and you want the full free giveaway for the strategy, here's the URL. Just click that and you'll get the full PDF of the strategy. So you can see all of the potential trades that are inside this indicator. But the two primary trades that we do here is scalp trades, and scalp trades are divided into high confidence, low confidence trades. So a neon green triangle, scalp trades are demarcated by double triangles. That sort of tells you that speed. This is a scalp trade. Neon red or neon green is high confidence trade. So high confidence short, high confidence long over here. That we've had over the last few trades. The plain green and light pink trades are lower confidence scalp trades. So those are directional scalp trades that we do. And we're generally doing them with 8 target 20 stop, which is a 1 to 2.5 risk reward ratio or 71% break even. But the proper way of doing it is to actually use the ATR value. But we'll save that for coaching. And then the other type of trades that we like to do is the diamond trades. Diamond trades are volatility breakouts or volatility breakdowns. And those are most effective around level sessions. So if we get a breakdown, breakout, that would be a reversal off London lows and want to get long. If we get a red, just a few minutes ago, I had this red diamond that looked like it was accelerating into the London low, and that was going to be a London low break, and I was going to sell that. But it didn't materialize. So the reason these volatility candles are constructed based upon ATR as well. What it basically says is, in this particular case, this was so much selling that it broke the average ATR. It was bigger than the average ATR. That means the sellers were dominant here, and therefore that gave us a clue that there's going to be more selling to come, right? It's kind of like super strong wave. It's going to have aftershocks, and we're going to trade the aftershocks. Do the diamond indicators more weight and chance of probability? Jason, are you asking me, is it better to trade them on a reversal basis rather than a continuation basis? Is that the question? Yes, and the answer is yes. They are better to trade on a reversal base than continuation base. Hey, Shob, Shoba, what is this point? Max profit USD 25K count, one trade apex. What does that mean? Mark, yes, you can use the 15-minute time frame. Obviously, like the longer time frame that you use, it's going to be very few trades with much larger stops and targets because everything expands on it. The ATRs are going to expand. What is I understand nothing of what you're typing. what is your point about Apex? Yeah, when you get two signals at the same time, it's a confusion. You have to or you get two opposite signals, one candle apart. There's confusion in the marketplace, right? The market is not in consensus of where it wants to go. So that's where the dilemma becomes, right? This is where I had the dilemma. I went short, then I went long, took my quick profits because it wasn't expanding, and then stayed flat because there was no continuation. So like right now, it's clear the market is struggling with trying to find a consensus. And maybe now I was just going to say maybe it's going to find it just missed the diamond trade. Off the bottom of London low. I'm going to take it just for shits and giggles in this particular case. On the assumption that it looks not a signal, but a look that the buyers want to take the bounce again, that they're willing to hold the level just for now. So I'm sort of front running that signal. Let's see if I'm right. Sorry, one single trade. Okay, yes, one single trade, but I don't understand what anything else you're saying after that. What is actually the point you're trying to make? Good morning, everybody. Good morning. Good morning. We are trading for our friends Hola for the New York session. Our friend Sam Saleh is going to come in. We're going to talk to him. We're going to discuss the general state of the market, and then see what is this. Yeah, this is a fractal indicator, right? So just to show you, you want to see this on a 15-minute chart. It's going to be, fewer signals. This is a 15-minute chart, right? So, I'll change accounts so that we're not distracted. But this is a 15-minute chart, right? And you can see that on a 15-minute chart, first of all, the ATR is in the 40s, much larger stops, much larger targets. But it doesn't, prevent you from seeing possibilities. Here's a Tokyo low bounce, right? It bounces off the Tokyo low, green diamond, right? And this is again that one of those two-way contradictory signals that resolve to the upside. So you have a short, long. Whenever I have triangles against diamonds, I always take diamonds because diamonds is a stronger signal, and then the diamond is confirmed by a green arrow. So boom, you can get long here. Your stop is going to be like 40 or 80 with a 40 target. And then, you have a much larger, the move here was from 488 to 631. It was a 150-point move on a much longer time frame. So yes, you have like three signals here, but the signals themselves are much more meaningful or much bigger. By the way, that little scalp that we did that I showed you, where is this? That trade worked. Just want to show you that trade worked, right? You can see that on the 1-minute chart. So I took it over here. I sort of front run the bounce because it looked like it was, it gave us the green diamond. It just disappeared, and then I took the long. And that's the really cool thing about the indicator. The indicator, even if it doesn't quite give you the signal, really gives you the nudge in the direction. Remember that all you're trying to be is on the right side of the market, right? And that's what we're doing. AZ is asking, when you say you trade small, you mean contract only, never DCA or smaller stop loss and profit target? So one, never dollar cost average, never increase my size. Yes, I trade small. I rotate my accounts and I hold my stops and targets. So the only difference is I will never expand my stop. I will sometimes contract it, or sometimes I'll just get out before my stop hits. If I feel the trade isn't developing the way I want it to, or if I feel like I did not execute the trade properly, right? So I will take my stop or less always, and occasionally I will take my take profit or less. So in other words, I'll take a little bit less or take profit. So I'll take a small take profit, but I try to do that very rarely. But that is all I do. Yes. If you do that, that puts you in a much stronger fiscal and then I think mental shape by doing it this way. Does that make sense, AZ? Do you understand what I'm saying? Give me a +1 if you understand what I'm saying. 29,500 holds for the 4th time today, my friends. Man, that is a like an MMA fighter that refuses to die. Yes, I trade NQ. Yes, not that we can't trade anything else. We can trade gold. We will try to trade gold a little bit later today, maybe with Sam, and certainly tonight when I trade tonight for Ola, I trade gold. But generally, the reason I trade one product only is because we trade on very small time scales. We need to time our trades, and we need our focus. You can see I already lose my focus all the time. You need to focus directly on one product, one shot, one kill, one punch. No, Mark. Good for you, Gloria hits another 15. Good job for you, Gloria. Gloria, are you practicing my rotation technique? Just curious if you're doing it, and if you are, share your experience. I'd love to know how it's working out for you. Mark, the longer time frame is embedded in my indicator through here. This is a longer time frame filter, which tells me neon or not neon, right? So whenever I have neon, it's the higher time frame filter that's giving me confidence of the sells or shorts. So it's already embedded in my structure. Oh, here we go. We just reversed ourselves big time off the VWAP. So we got to take that trade. Let's see. Is there any news on any news that any news happened? It doesn't look like it's news. It looks like just bullshit reversal. But let's see if we got headlines. No headlines. Nope. Ooh. Okay, now we got to go the other way. This is there's something going on here. I'm probably not seeing the news, but if you get a red diamond, green diamond, if this stays, too bad. I was like getting all excited. If this stays green, we got to go the other way, because this kind of volatility up, volatility down almost always creates extension moves the other way. So hang on. I'm waiting patiently. I'm going to wait patiently for this trade to hold. I want to make sure the diamond stays in place, and I'm going to go long this diamond. This is an off-menu trade that we see very rarely, maybe once or twice a session. Oh, look at this. It really, really jumped. Holy shit. Something has gone on. Yeah. I wish I'd come in a little bit earlier. All right, let's see if we can get this done. When you have that dynamic, come on. There we go. I'm going to take this off. All right. What happened here? Why is this not getting me done? Oh, I got done. Okay, we got done. It it was a delay in the execution. So when you get that dynamic, right? Why does this trade? Why do I love this trade so much? You have a volatility move down, immediately reversed by volatility move up, or conversely, up reversed by down. That means everybody who was convinced that they were right is immediately wrong, and they have to cover, right? They have to cover. So you follow the direction at which forces it's like, it's like jiu-jitsu, right? You think you're going to make the move, and then you wind up falling flat on your face. So I want to go with where the force is, and the maximum force of pain is to the upside in this case. Well, just like when you go the other way, maximum force of pain is to the downside. So, you know, it looks like it's some kind of. I'm trying to see if it's a news reaction or not. Do we have? I don't see any red tags. Nothing clear here. We do have a buy, a neon green buy, so I'm going to be buying this right now. And see if I can get that done. So we sort of broke down below and then recaptured VWAP, which is interesting. I don't know if it's if it has any meaning beyond that, but they did recapture the level. Let's see if they want to hold. The BK bundle gets you Kathy's zip indicator as well. Wow, look at this! Look at this two-way vol. I'm going to exit and sell. Wow, man, this a lot of. Okay, let me just organize myself here on the structure. Blend myself in. There's a lot of chop action and not really anything off of. I don't think I see any news, so we could just be getting whipped out of positions, which happens. Let's see if this one resolves. I scalp. We scalp. We actually do both. We scalp and do day trading. When we have session level session trades like London lows, New York highs, New York lows, we try to make a little bit of day trades there. But generally, we're scalping signals here every 5-10 minutes. Right now, we are just in this very, very choppy two-way market where we're getting both buy and sell signals at the same time. So it's very destabilizing. Basically, we went long here, went short here, long here, lost money on the short, made money on the long. Went long here, stopped myself out because of the reversal short here, and staying short here, hoping that the short works, but it may just bounce back against us. This is just chop territory, and I'm taking many signals here just to show you the possibility, but I don't think necessarily that I'd be taking them if I was running the my fund accounts. Yeah, we totally. So again, we recover. Now the consensus really goes to the upside, and if I have now I just got to go. Now I just have to go buy. I'm going to trust that we finally resolved ourselves to the upside on this move. The stop is going to be like right underneath here, all these session lows. Let's see if we can get some more movement over here. Just give myself. Usually, when I'm going to do kind of a positional trade, it's going to be short target, long target type of structure. But this looks like the market kind of resolved itself above the VWAP. So let's see if we can get a short target and a longer target move here. Yeah, I hope it goes to 29.6. We'll see if we can get the power move to the upside. This 8 o'clock hour, generally, New York core comes on, and um, that's when we start to get some some more market movement. Now, if I'm trading this like in a day trading fashion, right? We recovered the VWAP. I'm basically trading the VWAP recovery. The really proper way of doing this is from session to session. So if I really want to avoid noise stops, I have to be underneath here. I have to be underneath the last key session support, which is the prior day Globex lows, like right around here. So sort of give myself all this room to let the trade run. Because this is going to be a longer type of position than just a couple of minutes on the resolve. On the other hand, we can switch around to the other account. We can just make one account. This is the cool thing about here with Tradovate. We can make one account scalp only, the other one directional. So this one on the scalp only. Let me just change this around here. Gives us a scalp signal to the upside, and it's a neon green scalp signal, high confidence scalp signal. Let's see if that works to the upside here. Jason, the bundle is always better because you can then enjoy Kathy's signals as well. But I leave it to you at how you want to do this. Long 45, and I'm at 53. So this is the scalp trade, and you see the scalp trade gets done. High confidence scalp trade, nicely done. Now we can go back to the other account just to kind of watch it. Again, this is a positional trade, so it's a much longer trade, giving ourselves much more time to see if we can develop this with a short target and a long target. The cool thing is, with all accounts, I can really show you the bigger trade structures because I'm not trading them, the way we did with Apex, super tight. No, Sam is coming in to hang out with me. Kathy doesn't trade live. Sam is very much a scalper, just like me. So it's just going to be interesting to see because he trades volume. So it's going to be interesting to get his insight on volume and just a general market view of where he thinks the market is. Good morning, guys. Good morning. 8 o'clock in the morning. No news really today. It's FOMC minutes day. It's about the only thing that's on the calendar. Markets are a little lackluster, but surprisingly resilient around the 500 level. 3 or 4 times tested and bounced. And we traded those bounces pretty much all the way from London to New York. Did I think about 7 out of 8, maybe 7 out of 8, I think, on the scalps. Then we switched over to these Ola accounts, just started trading those. We're at like 2-1 on the scalps, 2 wins, 1 loss, and now just trading this positional bounce. This positional trade is essentially based upon the idea that we broke above VWAP, holding the VWAP region, and the next, the stop for us will be the next natural level, which is the prior day Globex low. And we're trying to trade this to short target, long target on a more positional basis. Yeah, Kathy trades Forex only, right? So although she started to trade, I think NQ a little bit now. She's got a couple of like NQ ideas that she likes to trade, but generally she's a Forex only trader. She trades on the 1 hour chart, so she does not scalp at all. She is a much more of a positional trader. It's a very different experience trading with her than it is with me. People really like that. They like the contrast. Getting a second green diamond, kind of holding the view up again, but very clearly, as they say in the South of America, lots of heat, little light. Now, lots of movement, but little direction. What's my favorite trading book, other than Wizards? The one that everybody talks about. I think the one that everybody who is who's been trading for a while, like, I almost feel like you have to say this is your favorite book, but it really is, and it's Mark Douglas. Let me pull this up for you. Douglas, Trading in the Zone. Trading in the Zone. It's such a good book because it really expresses sort of all the key, all the key psychological flaws that all of us fall through. It's just, it really is the Bible of. It's got nothing to do with strategies, but it's really like the most important book as far as just creating a mental model of market. Which the bottom line is, the most important thing in Mark's books is that at any given time, everything that you think can happen can be the exact opposite. Like, in other words, there is no guarantee, there is no certainty, and there's never ever a possibility that the market can't go completely crazy on you. Another scalp signal over here. So I'm waiting for it to. I'm just changed accounts. I'm going to try and buy this. See if I get in there. Okay, I'm in for another scalp to the long side. So we're going to do a little bit of scalps, and then I'll update you on the positional trade, which we're still holding positionally on the move here. Go read S.O. Bandit. Can you give me the full title? We'll be happy to. I'm happy to look it up. What's the book? S.O. Bandit. Let's see if I can find it. Bandit book. Nope. I guess whatever title you gave me is not the one. What's the name of the book? Yeah, Thinking Bets also. I don't love her book. Maybe it's because I don't like her a lot. So I'm biased, but I don't really love her book. But principally, she's correct, Annie Duke. One of the best books, just purely, yeah. So WFO, give me the correct title, man. Otherwise, we can't. So Spanded. Oh, So Spanded. So Spanded, the book. Yeah. My God, Jesus, how old are you? Speaking of old, I'm going to give you a book title that I really, really like. So Spanded. Is there any book about this? Secrets of So Spanded. Harvey Huck. Oh my God, how old are you? Holy shit, Harvey Huck. It was starting to move, guys. So the scalp trade worked, obviously, and now let's go. Oh shit! All the trades are working. Wow, wow, wow! So all the trades are working. I took the we took the what do you call it? Positional trade over here. Where's my positional trade? Wow, this really recovered nicely, right? Great. Wait, hold on a second. Hold on. Which account am I in? 160? That's correct. Okay. So we're in the correct account. So we took the positional trade over here. We held the stop below the prior day low right over here. There was a short target here and a long target. It actually, both of them got hit in the same candle. That's how big a move it was. So both short target and long target got hit. See, we sold one at 72, one at 62, just a complete sweep. And the entry here was around 54, right? We took the entry at 54 at 50. So we came in at 54, 57. One got sold one at 62, one sold one at 72. So that was the positional trade that worked out very nicely for everybody. And then the scalp trades all worked very well on the scalp account. So here's the scalp account. This is us doing the scalp trade here, just catching the scalp trades. So all of that worked out. All of that worked out nicely. Oh my God, so Spanded, Harvey Hookins. This is like literally going back to my youth. This is 1990s. Very, very early stuff. And it was interesting because I actually it'd be fascinating to read this because obviously technology has completely outgrown this guy. But it'd be interesting to see if you there's no way you could practice what these guys did because algorithms completely destroy your edge. But there may be a way to modify their approach. In a way, you could make the argument that I do what these guys do now, just simply on a longer term time frame to avoid the algorithms against me. But yeah, it's probably an interesting book. But the book that is really great reading, really great reading on Amazon is Pitbull by Marty Schwartz. What is this? Why is this coming up? Oh, Pitbull. It's Pitbull. No. Oh, here it is. Marty Schwartz, Pitbull, who was like probably the first retail day trader in the 1980s. Just amazing guy. Super interesting. Recounts his whole story from beginning to end. Just first of all, a greatly entertaining read, but a lot of interesting insights in there as well. Just really worth reading. Great guy, great book. So if you just want a pure, clean book for entertainment, that's the book that I would recommend for you guys to get. We have a scalp signal here, but not a high confidence one, so I'm going to pass up on it. You're a 70 baby. So am I, my friend. Jesus. I actually now you sort of, you got me curious. Now I'm going to definitely download the Audible and just listen to it because I bet you there is some interesting kernels of insight that we can get. By the way, I'm going to sell this. Which account am I in? 61, sell. So I'm taking the short here. This is a sort of a low confidence long contravened by a short signal. Let's see if I'm right, or if I'm going to get a little bit of whipsawed over here. We had a big upside move here, but stall on the move. Actually, you know what I'm doing? I'm probably wrong because we already slid from 56 to, yeah. Let's see. We'll see. Let's see if I want to take this scalp here. Come back here. All right, I'm just going to see if I can get a short exit on this thing. Again, I'm a little bit late on execution because I'm yapping, but the principal idea behind the trade is low confidence long followed by a reversal short signal. Take the reversal short. Again, same idea as, green diamond, red diamond. Take the flip, trade the flip. Usually the flip works. It actually would have worked here, but again, I executed myself poorly because I came in late. This is the candle I should have come in on, and I did not trade that well. So now I'm just trying to see if I could nurse a win out of this thing. Time is it? 8:24. Okay, cool. No calendar events today, so sort of a quiet day. We're just trading until the open. So let me just show you a cleaner view for those who are trading positioning. Again, the money is in the position trades, right? The scalps are for fun, but the money are in the positional trades. So if I choose the positional trade view, just kind of walk you through the whole thing. All right. What you see here on a narrative basis is here we are challenging the VWAP, right? Challenging the VWAP. Oh, and then now we find that my scalp trade worked very nicely. I reversed my chart. So we're challenging the VWAP, right? So like if you want to look at positional trades only in a very super clean view and don't get the scalp trade pollution, you just simply choose the session level view. You go into dots, you go into day trading, but you choose the session level view. And this gives you far fewer signals, but these signals are much more meaningful in the sense that they have much bigger profit potential, and frankly, most of the time, probably a higher accuracy potential. So the difference between a level rejected and a level confirmed is if you run to a level and you get like here, now here's a level rejected. You run to a level to VWAP and you get a reversal signal like a red diamond. In this case, this fails. But this will be a legitimate short here. You basically claiming that the VWAP is going to fail and you're going to get short. So boom, it gets failed. When you try to trade level confirmed, meaning that you want to go with the level, the touch of the level is not enough. What you need is a double confirmation. So in this case, you have a green diamond that pierces the VWAP, and then the much more important green diamond that trades above the VWAP. It's telling you the buyers have hold the price above VWAP, and they've held it so much that they're willing to take a volatility long. So when that happened, that's when I went in the 60 account, I believe. If you look at the 60 account, you can actually see this much better in the 60 account. So you see, this is where I go long, right? I sort of get short, I reverse myself, I go long with a two exit structure, short, long, because this thing was so powerful. It took out both the short and the long in the same candle. But that is the trade that you want to do. And right now, they're continuing to hold the VWAP, right? It's still very, very positive above. We don't necessarily have a trade here, but the whole idea of how you trade with the levels or against the levels is the question of confirmation. So you can really see that very clearly in the trade that we made here. We held, confirmed the VWAP, and then it took about 10, 15 minutes, and then we resolved it. That's a classic positional trade with our indicator that can trade over and over and over again, as a trade confirm level. Let me know if that makes sense. If you have any questions on that, happy to discuss this more with you. But basically, that's how it plays out. Clear? We can also, by the way, just look at scalp conditions, right? So since we're nowhere near levels, it's probably like the way we should be just looking at this. If we're not touching any levels, the only trade to be made is the scalp trade, right? So there's no levels in the immediate vicinity. If you look at, oh, you know what it is? Shit, I just realized this. Okay, so I don't have the levels on here. That sucks. Yeah, that's the problem. Okay. Hang on. Yeah, it's just in this particular view, if you're doing the scalping, you won't see the levels. But you know what? You could, I could create a custom view for us, but I don't want to bother with this. If I go to both, level is 609 and the other level is 14. So you can kind of remember that and then just simply go scalp. For those of you who are like on the advanced aspect of this indicator and want to create kind of a super advanced view, by the way, total reversal view, right? What's my scalping? Oh, this is my scalping. I'm in my scalping structure, 161, selling this, total sell. Why am I selling this? It's a low probability long reversed with a short signal. So let's see if that works for us. So this is a pretty decent looking scalp here against a low probability long. And it's low probability because it's not neon, right? It's not neon, it's just green. So it reversed itself, and I want to take that reversal. There we go. And the reversal got done, right? So that's pretty good. We're actually 4 for 4 on the scalps here, just purely scalping out. So if you want to see levels, it's not that it's important for us to see levels now, but if you want to see levels along with scalps, this is a very advanced way of configuring it, but I'll show it to you guys in case those of you who are interested. So if you're just looking at scalp signals, no session level signals, no diamonds, just triangles, but you still want to be aware of the levels, what you do is you're going to choose custom. You make your own titles, right? And within that, you're going to just, because in a custom, everything is shown, you're going to just delete what you don't want. You're going to take our labels off. You're going to take dots off. You're going to take the ATRs off. And I think session levels are there. So yeah, and just wait, why do I have triangles? ATR breakouts. You're going to take those off. So you kind of just delete everything, and now you're just looking at session levels and scalps. By the way, scalp to the upside by high probability. Oh, look how fast that was. That's a high probability scalp, right? Neon green triangles, boom, happy to take it, right? Take turn bullish. So I made that. So we're actually really good on scalps today. We're like 1, 2, 3, 4, 5, 6 positive scalps, just purely scalping. You guys having fun? So this is a custom view that you could create just for pure scalping with sessions as context. Now we're going into Tokyo highs. We're going to Tokyo highs. So the view that you really want, if you're, is a session view now. So I'm going to just change myself to day trading views, session level views over here. And here's the problem though, because I made a custom, it overrode it. So now I have to click all this stuff back on. This sucks. Okay. So you have to manually do this. So this is where we get into the session level views, which is interesting. Let's go. This is our session account, the 160, and what's happening here is that we're breaking above Tokyo high, London high. So we're clearly having a nice rally. That 500 level really held, as we saw earlier in the day, right? I mean, the cool thing about scalping with me every single day is you literally see in real time, absolutely see in real time how the narrative progresses, how you hold the level, you consolidate, you run the fresh levels, right? We do this over and over again. And the only way I could convince you is just by you guys either watching this on replay or watching it with me, and how in real time all this shit develops exactly as I show it to you, right? Like there was no doubt. We saw the London lows hold. We saw the market consolidate. This is just sort of like the thing that I hope you guys, by the way, rejection of the Tokyo highs, right? So we're going to just sell this. See, red diamond, Tokyo highs get rejected. Let's see if this is going to be tradable. We are in the, I got to go in the 160 account. This is our session account. We're going to wait to make sure that this candle is real. It doesn't, it goes away. See, I had a feeling it might go away. So no signal. No trade. But what I was going to say is, you don't need to believe me. I show it to you every day at how session levels create narratives. And the other point I was going to say is, you see every day how price action is not random, right? It is not just, like a drunkard. Today, right now, I'm going to go up. The next minute, I'm going to go down. The next minute, I'm going to go down. There is a methodical process here as participants react and contract against levels, right? You can literally see that. Now we're trading above Tokyo highs, challenging London highs, and now we're having a much stronger, bigger bullish session than we see. But you guys see how level to level the market develops its own narrative. So now we're above Tokyo highs. Now this becomes a legitimate day trade as they're trying to challenge, the full move to the upside. And now sort of, we want to be long this thing against the lows of the Tokyo highs, and probably oh, Jesus. Ugh, I got too fast. I couldn't move I got filled on my target. So effectively, I'm going to count this as a short target. And I'm going to count to see if I can get more of an extension here into the prior day's lows. So I want to be underneath Tokyo highs here. Positioning. I was using my scalp setting because I don't change my settings, and literally my the +8 got done in 1 second. So I didn't even have a chance to move my target higher. So I'm going to count that as a short target made. I'm going to try to see if I can get a longer target here on a positional basis. But we're basically, through the key levels and trying to run the prior day's trading high. Yeah, the 29,600 is coming. Not the 600, actually, the 700, right? Actually, the 700. We're through the 600. You were talking about 600, but it was actually we're through the 700 coming through. Because I remember you said that when I was trading over here, you said it could expand all the way to 600 when we were in the 500s. It ran through the 600s, and now it's running towards the 700s. $668 is the session high right now that I'm looking at. Let's see if we can run the 668s. That is the London high. Now, you know what? I'm going to take this out. Usually, I want to be patient with it, but if it rejects here at around London high, I'll take the rejection as a trade. I think it might be a better rejection trade than a continuation trade. The continuation trade was here. We took that continuation trade and expanded. Let's see if it gives me a rejection trade. Oh, you're on the CFD side. Oh yeah, that's why you had the different readings. Oh. 840. We're getting about an hour away from the New York Open. Let's see what Sam wants to do. Yeah. It depends on which broker also, because every CFD value is different. Because every broker, those of you guys, by the way, who want to understand why are CFD values different from futures values, because brokerage who do CFDs, they do like a 3-month blend. So this is the front month futures contract. This is the September contract. But what they do is they take September price, December price, and even March price. They do 3-month forward, and they blend those prices to get kind of a general CFD price. So that's why you have the differential in values. In the greater scheme of things, it doesn't matter because it's a 1-for-1 movement on a short-term basis, right? It's just simply if it moves 10 points from 700 to 710, it's going to move 10 points from 600 to 610. So we're stalling here. This is where it gets interesting. We're stalling in front of London highs. If I get a red diamond, I definitely want to go short. I want to go short here on the assumption that the level failed, right? Good morning, everybody. We're chilling and grilling here with NQ. We had a whole series of positive scalp trades, and now we're just trying to look at a little bit of positional trades with the diamonds, just to keep the two views clean and clear. Markets challenging London highs and prior days trading highs around the 29,700. I'm trying to see if we blow through these levels or we reject them. So I'm just being patient here on the trade. I can also just simply create a second view for us for the scalpers, just to trade the scalping structure. A couple of high probability scalps. We didn't take those, but we took all the other accounts. Through the price through the 29.7. There we go. There we go. Maxi B calling it out. Nice job. Nice job. We're really picking up strong bullish vibe here. Okay. Good. Sam is going to come in soon. So I gave it up too early. I had the right structure here, and I was like, it looks like it's stalling. I should have been patient because we ran all the way up, right? But you can see on the indicator how well it traded. I kind of got a little faked out by this red move. I thought we were going to get a red diamond. We didn't. And all the more reason, by the way, why the indicator works so well, because you did not get any false sells, right? The indicator kept you in the trade if you just sort of trusted the process. Let's see where I'm just wondering if oil came down. Is this a function? Oh yeah, look at that. Look at that. Oil was 85, now we're 84. That's what's helping us. And look at the yields. Everything is helping us. We were 7, now we're 6.5. All of the macro flow is helping us, and that's what's giving us a lift. I should have been looking at that a little bit earlier, but that's definitely helping us. So that is what's driving the price through all the levels. London high now is 722. We're through the prior level session, but now I'm looking for a little bit of a. Let's see if I get a little bit of a pullback. So far, no red diamonds. Just looking at my, oops, no, cancel. I want to go here. Oh, maybe here. Sorry. This is my, so we have a, sorry, I want to go into my 61 account. I'm in the 61 account. Let me show this to you. Oh, because I'm in the other. That's what I hate about TradingView. I'm on the 61 account here. So I'm just taking one more scalp, strong scalp to the upside. Let's see if this is going to work for me. And if it does, it's probably going to give me a really good clue to the reversal signal. But let's see if I get one last juice to the upside here. I'm going to go into both views. Oh, there we go. I'm going to take this profit. Nice. Okay. This puts us 7 for 7 on the scalp side, which is beautiful. And still no reversal signals at all. Actually shows a breakout above prior day's low. Like, this is really hard for me to take. I'll be the first one to admit I have a very hard time taking strength into strange signals, but this would be a very good day trading signal. We are literally above the prior day's low. Remember, if the diamond is above, floating above, that's a big breakout signal, right? So this would be a nice good long that actually extended now to 39s. But anyways, we took the scalp. That's good enough. You see how clean the signals are now as we're climbing. We're just in this beautiful, beautiful trend move, and it's basically catching every breakout on the trend move. But I have a really, honestly, there's zero reason why I should doubt the process, because the process is so good. Diamond that is above the high, right? In other words, the low is sitting above the high. That's a legit breakout. You trade it to the long side. A diamond that is above the prior day's high, legit breakout. You trade it to the upside. Just take that trade. Don't doubt the breakout. I always have a hard time doing that. Look at how volatile the climate is now. The climate gets up into the threes. That's a very, very overbought condition. Between 3 and 4, it's just kind of screaming overbuy. Anybody trading this to the long side right now? Who's taking all the momentum trades? I bet DRD is doing it. Doctor, are you there still? I bet he's taking it. Hound Dog, are you taking all the greens? And Miguel, holding and trailing. Nice. Very good. You guys are all trading better than me, is the whole point. I finally get my reversal signal. All right, so let's play. Okay, I'm gonna go to the 60 account. And look at my reversal signal. No, my reversal signal is still in play. I'm going to be selling this. Nope, it goes away. Oh, you teaser. Still a long scalp, actually, a legit scalp. But I'm not taking the scalp because I'm on the other account. I'm hunting the red diamond for a reversal move. Let's see if I get it. Oh man. Nice clean reversal, man. 150 points. We went from being down 1% to like up 0.5%. That is a nice reversal. And pretty unusual this time of the day, but I guess, I wonder if we have any news, if anything is happening. Oh, U.S. Treasury current maximum size $2 billion per operation for intervention. I just did supporting a long bond. Okay, that's cool. That's helping the market, obviously. You get out early in the ES. I hear you. I'm waiting for that red diamond, baby, which ain't happening. Remember, sometimes you got to just stop this thing for 45 minutes before you get the actual signal. Oh, God, man, I'm getting allergies. I'm sorry, guys. I'm rubbing my nose like I have a 10-year Coke habit, but it's allergies. I promise you. Red down arrow is telling you that it's a thank you. It's actually an early red reversal. Let's take it. What the fuck? It's kind of an early red reversal signal, not a full volatility down. It's kind of an early warning signal. Not like the best of signals, but I'm going to take it as as just a shot. I'm going to stay above the London highs here as my stop. We give it a shot. Let's see if this is going to work. The signal that we're looking for is actually the diamond signal, that's a high volatility one. This one just tells you warning, weakness showing up. So let's see if the warning turns into a viable trade yet. But it's not quite the signal that that we want. Well, hey. Guess who we have in the room here? All right, beautiful. Hang on a second. Let me. I'm going to go to camera view here. Let me see if I can do this. Sorry. Hey, I see Sam in the room here. Hey, Sam, how are you? I just need to organize myself here. I think here we go. I want to do all the 2-person. And I want to do, just bear with me a sec, Sam, Cam. I want to take myself on camera. No. Don't want to screw this up. How did I screw this up? Wait, do I do this? Sorry, edit this. Oh, maybe you know what? Look at that. The short worked, which I'm sorry, guys, I'm off. Let me see if I can do this. You know what I'm going to do? I'm just going to do it this way. We're going to do it. Let me see if I can bring. Here, I'm going to do it this way. We're going to do it this way. We're going to bring Sam on. Hey, Sam.
Hey, Boris.
Sorry, I'm going to.
How are you? Long time.
Good, man. You know, I am doing this desperate. Okay. Oh, this actually works. Okay. Cool. And then I can share my screen. Hang on, guys. I'm going to share my screen with you, and I'm going to bring Sam. Oh, this is really cool. This actually does work.
Sure.
Okay, so I'm going to share the window. What I want to do, this one, share. Okay, awesome. All right, hey Sam, how are you? Good, guys. We got Sam Saleh from Hola today, but I want to wrap up the last trade here. So yes, you guys can actually see this now perfectly. So you see this was the early warning sell signal off the London highs. I took it, worked. Sell here, buy here. That's all we do. Nice and clean. On the move. We had a massive move here, Sam. Like, look at this.
I know.
Complete reversal. Like, I'm showing my indicator how it. Of course, I did not trust half my signals, which is always the problem, right? You never trust your process. Yeah. I took literally half the trades that I could have because I was like, there's no way it's going up. There's no way it's going up. And it's all so super clean. Oh, here we go, guys. One more thing. We finally get the red diamond. Really worth a shot. So let's take the red diamond trade here. 5, 4, 3, 4 seconds left. I'm going to sell this. And now we've got to just basically hold against, hopefully it's going to work for us. Hold against the highs and see if I could get the move here into the level. So I'm going to nurse this trade, for a while. We'll see if it works out. I'll update you on it. But, Sam is here with us today because I want to tell you that what we've been doing here for the last month, which you may find kind of interesting. And I wanted to see, it looks like it's actually working for us, right? Okay, let's just take it. Let's just take the profit. Okay, we'll take the profit. What you see here in on the chart, aside from ignore all the triangles and the diamonds, is sessions, session high, session lows, right? So on the chart here, we've been trading. So we have Tokyo high, Tokyo low, London high, London low, New York high. Obviously, New York is not up yet. New York high, New York low, VWAP, prior day Globex high, Globex low, and prior day New York pit high and low, right? So these are all the levels that we have on the chart working, right? And my argument that I've been making for the last month, which has absolutely been validated, is that the market essentially trades these levels, level to level, right? It trades London lows to, like if you look at the narrative of how the market traded today against these levels, right? We had London lows that held. We just held the London lows. Then we recaptured the VWAP. Then we went and we recaptured the Tokyo highs. And then we went and we recaptured the London highs, which now are all the way over here. And then we recaptured the prior day's lows. So like today was just one of those perfect days where it sort of showed everything. But what my argument here is that it's not fib levels. It's not, ICT that are invented on the thing. What institutional flow does, because you've traded, of course, a lot institutionally, is they're always looking. I remember this even in my dealing room when we were at FXCM. They're always looking at prior day's lows, session lows as key levels because they know that's where the business is going to get done because those are incontrovertible. They're not made up. They are literally recorded on the chart as is. So people know, there's supply demand around these things. We want to see interest or a disinterest around those levels. Do you agree with me on that?
Oh, 100%. Yeah, 100%. You know, you got to look in the areas of the chart where everyone else would be looking at, especially like what you mentioned, where a lot of trading activity has occurred. And yeah, there's many ways you can identify those areas. And as you said, you know, key highs and lows of different sessions are definitely up there.
That's it. And you know, just keeping it simple, because the indicator just basically collects all this data and shows it to you. It's projected over here, so we're under, like, for example, you know, I don't know about you, but I'm a horrible momentum trader. Like, you know, I'm always looking for the turn, So one of the things that has really helped me is, of course, like an idiot, you used to always go, "Oh, it's too high. Gotta sell the breakout, sell the breakout." Selling the breakout is the stupidest trade in the world, because it's almost always going to be wrong. It's always going to take you higher before it takes you lower. So one of the things that's really helped me is, if I'm going to trade the turn, I'm going to just do it only when I see a failure at a level. So in this particular case, we had a failure at London. This is a volatility. This is basically the candle making a full ATR move to the downside, volatility failure. That's when I went short, and that's when I actually had a chance of making money, because then we had extension on the short. So I forgot what I was yapping about, but my point is that using these levels has really helped me lessen the stupidity of my, like, you know, make less dumb trades. Only come into trades where it makes sense to fade the move. But what I wanted to kind of talk to you about today was, I was fascinated to see if, because you're obviously looking at volume delta, and why don't we take a look at your chart here? Let me add your chart to the stage. I'm going to remove mine. Hang on, remove mine. Add yours. And you can explain to people too, you know, what you're trading, and you can look at the price chart. Because what I was fascinated about is, I wonder if a lot of your signals will start to dovetail. Like, in other words, if the change in the delta, change in the volume, kind of dovetails with my volatility, you know, reversal signals. So I wanted to see if there was any confluence there for the time.
No, absolutely. And I think, you know, in previous sessions that we've been on, we've had our signals were very in line, which is amazing to see, because we were interpreting the markets in different ways, and we came to the same conclusion most of the time. So, but that's just trading 101. You know, so many people have different ways of interpreting the market, but a lot of time you'll see, you know, we come to the same conclusion.
Right.
I saw a comment in the chat. Is Sam a scalper? I am a scalper. So I'm basically always just looking more at the efficiency of, you know, buyers and sellers. Which one is more aggressive is obviously very important. So this shows the delta at the moment. So the difference between buy contracts traded and sell contracts. Only the aggressive participants are ever shown, never passive orders. And I'm basically trying to figure out.
Sorry, I'm going to slow you down. So we have a whole bunch of new people here, and obviously,
no worries.
We need to walk them through this a little bit. What's the difference between an aggressive buyer and seller and a passive one?
So an aggressive buyer is basically a market order, right? If I hit the, you know, enter button, the buy button manually, that's an aggressive buy. I'm basically saying I want to get in at the best available price right now. I don't care. Even if I get slippage, doesn't matter. I want to get in right now. That's an aggressive order. A passive order is essentially a pending order. So like a buy limit, you know, you say, I want to get in at 29,660. You place a buy limit there. That's a passive order. Once the market drops down there and triggers you in, your buy limit gets matched up to the next aggressive seller, and the trade is made. And then it appears as a sell actually on the footprint. So essentially, the best way to read the footprint is just remember, new buyers coming in look like buyers. New sellers coming in look like sellers. Buyers taking profit look like buyers. Sellers taking profit look like sellers. Buyers getting stopped out look like sellers. And sellers getting stopped out look like buyers. If you can figure that out and remember that, then it becomes quite easy to interpret when you add a bit of logic. Like if you get to a high and you just see a bunch of buy orders come in, that's buyers taking profit, right? There's loads of sell limits being triggered and being matched up with the next available aggressive buyers. And that's why it appears as buyers always. So add a bit of logic to that, and then it becomes a bit easier to read and you can kind of figure it out.
Mark says, why does
yeah.
it appear as a sell if both of them are passive? One of them,
No, only one.
one of them is
passive.
not passive. One of them is active.
Yeah, exactly. So if I'm a buyer right now and I enter, I'm going to appear as a buyer, right? Because I've clicked the buy button. Now, if I set my take profit at the top here, let me just draw a line for you. Say
That's
I set my take profit here.
Sell.
That's a sell limit order, exactly, a passive order. So when the market comes up and triggers it, it gets matched up. My sell limit gets matched up with any available aggressive buyer, and therefore it appears as a buy on the footprint. Does that make sense?
Yes.
There's always an opposite side of the trade, and it's always aggressive being matched up with a passive, but you only ever see the aggressive on the footprint. Because it's kind of pointless. You can't show the passive as well. Otherwise, everything would just be zero. Do you know what I mean? Like, yeah.
Unless you're a passive aggressive personality. No, I'm just kidding.
Exactly.
Yeah. But that's actually fascinating. I mean, the very, very interesting point that Sam is making is that there's always two sides to the market. Because when we're in a trade, we only think there's only one side, our side. There's only our side that matters. But there's always a guy on the other side who thinks you're wrong. And, it's a dose of humbleness that we need to have with us every time we trade to truly appreciate that, we're only just probabilistically thinking we're right. We're never actually thinking that we're right.
Absolutely.
Yeah.
No, really good point. Really good point.
Yeah.
And, it's useful because then you can kind of figure out where people are getting stopped out. Like right here, right? You see this little wick at the bottom?
Yeah.
Okay. How many buyers who were trailing, who were up in this, who were in this trade going up, maybe trailed and put their stop loss right below that wick. And the moment we touched it, look at all those sell numbers appear. That's just buyers getting stopped out. That's not new, fresh sellers coming in trying to push the market down. That is literally buyers getting stopped out. So I wouldn't chase that volume. I would ignore it, right? I don't want to chase that volume because there's no true intention behind it. It's just buyers getting out the market.
Sam, if this is just buyers getting stopped out on a retrade, it almost makes you be bullish anytime, like at the 17, when the delta turns green, you kind of just say, hey, this is a super tight risk. I can take it right there at the 17 block, and you get popped. You're good for like I don't know how many points that is, but because I can't see quite the chart, but that's like a super low risk entry on the first possible move, right?
Absolutely. I mean, like I said, the key, you're absolutely right, Boris. And the key is to know which volume to chase and what to ignore, and really kind of read it as a story. If you just jump, whenever you see high volume, you just, jump in, you'll get absolutely annihilated in the markets because, you're chasing a lot of exit volume. You're not chasing fresh new volume. Right. You're just getting eaten up left, right, and center. So you've got to know what to ignore, what to actually chase. And you can see it here, for example. So all these were buyers getting stopped out. We ignore that, right? And then you see these 53 buyers that came in. That's real volume. That's new, fresh buyers coming in. It can't be stop losses because they would have already been triggered here. It can't be take profits. Doesn't really make that much sense because if a take profit was here, like sellers putting their take profit, not sellers, sorry, buyers like take profit doesn't make sense, right? Why would it be there? So that's actually real fresh new buyers coming in quite aggressive at 53 contracts, delta, another at 55, and then we got another at 41. That's the volume you want to chase. Do you see what I mean? You don't want to chase the volume that is basically people getting stopped out or taking profit. That's exit volume. You want to chase the volume that's fresh coming in and has intention.
So
it's not always going to work out, but better chance.
So for sure. So let's kind of slow this down just a little bit. Each one of these vertical boxes, like the one stack and the other, that's a candle.
Yeah, exactly.
And is it a 1 minute candle?
Yeah, this is the 1 minute chart.
Okay, that's fine. No, I just want to explain this to everybody who's watching so they understand. So that is literally 1 minute candle stacked in these little boxes of volume. Sam segments this, I believe, by what is your segmentation?
It's
structure?
at the moment, I believe it's on 16 ticks per box. So basically
Okay.
4 points. Every box is 4 points.
Every box is 4 points.
Let me
So
just double check. I'm pretty sure.
Yeah.
I put it
Hey,
at
can
16.
I ask you? So
Yeah,
the other thing is obviously we're big fans of ATR. We've been where's my ATR actually? Uh, oh, hang on a second. Oh, for some reason my ATR just went off the view. I don't know why. Oh, maybe I. Sorry. Let me. I get
Right.
confused with my own view here. Why is my ATR not showing?
I'll just answer a question while you do that.
Okay. Sorry. Anyways, my point was
okay, go on.
let's just imagine ATR is 10 right now, right?
Yeah.
Which is what is that? That's 40 ticks, right? 40 ticks. Would you create a box based upon ATR reading as kind of a a fraction of ATR,
I
so
mean,
40 ticks basically
you could.
is like
You
if you
could.
yeah.
I get what you're saying. You absolutely could. Personally, I just do it based on just what looks right to my eyes. So I kind of want maybe 4 or 5 boxes per candle. Too many becomes too hard to read. Too little, you're actually missing information then a bit, because then it all groups it into too big of an area. And so I kind of just change it always 4 points up, down, whatever. Not 4 points, sorry, 4 ticks up or down, depending on how volatile the market is. 16 seems to look quite nice right now, but say the candles get bigger on average, I might bump it up to 20. But it's literally just for my eyes. What looks clean.
Honestly,
yeah.
I bet you if we ran that against, like right now ATR is 16, right? So I bet you if we ran, basically you are dividing it in a fifth of an ATR, 20% of ATR pretty much on every one of these things.
Yeah.
Kind of just almost intuitively on the thing.
Yeah, exactly.
Makes sense.
Yeah.
Which makes sense. The other thing that I want to ask you is that there was a question here: is footprint different from bookmap?
So footprint is just a type of charting, like a type of chart. Bookmap, I believe, have their own footprint add-on or whatever you call it. I personally don't use Bookmap, but they're more for the depth of market and the heat maps. But absolutely, there will be a footprint version of within Bookmap. But any order flow platform will have some kind of footprint. Some call it cluster volume, cluster delta. I don't know. They have different names for it, but essentially it's the same thing. Yeah.
And then they overlay footprint against volume profile as well, right?
Yeah. Yeah, absolutely.
All of these are essentially ways to slice and dice volume measurement, right? And like Sam says, the important part isn't how you slice and dice the volume measurement; it's how you interpret it. That's the much more important part. The way Sam has it sliced and diced is very, very clean and simple. You can see that it mirrors the price action. So essentially, I would imagine he's probably looking at clues from volume and price points on the chart, because you can literally see, swing lows, swing highs here on this 1 minute chart as reasonable, rational stop points against whatever, structure that he wants to take, right?
Yeah, exactly that.
Purple boxes are more than green ones, then sellers are in control. The purple boxes is sellers, right?
Yeah, purple is sellers, green are buyers, and it's just a difference between buy contracts and sell contracts traded. It doesn't necessarily mean exactly. It doesn't necessarily mean if there's more purple or more sellers, but it's going to go down, because, like I said, you got to read the correct volume, right? Like here, there were more sellers, clearly 109, but we know and we identified using logic that wasn't true sellers. That was just buyers getting stopped out, right? There's no real intention behind this volume. Okay, it's not like a big institution came in dropping 100 contracts there, trying to short this market and going to start defending their position. It was literally buyers getting out.
Right. To put this into option terms, and this is a way that maybe you guys will really understand this, this was closing price action, not opening price action. And
Yes.
and what you really want to do is somebody making an opening move, because if they're making an opening move, then there's something interesting. That means that they are forecasting future that could be interesting to you. If they're closing the move, there's no future forecastable value, except maybe contrary value to what you're seeing. So a lot of people, I guess, making that mistake that they are basing their future decisions based upon closing price action rather than opening price action, and that's where they're making that mistake.
Absolutely. Very well said. Couldn't have said it better myself. And intention matters in the market, right? Because if there's a big player in the market, right, it can even be a retail trader. There's some huge retail traders nowadays,
Right.
Let's say there's like a big institution, whatever you want to call it, right? And they're genuinely placing a lot of money in the market, a lot of risk on the table. All right. Two things are going to happen. They're either going to defend that position very well, and they're not going to, they're going to keep basically absorbing the other side and try their very best to get the market in their direction. So you want to be aligned with them. But if they fail, and they do fail, institutions get it wrong all the time. They lose money all the time. It's not It's not like they have 100% win rate.
Yeah,
right?
yeah, that's what people. That's
but if they do fail,
people completely miss is that institutions are not infallible by any means of imagination.
Exactly. And if they do fail, you will be able to clearly see it on the chart, and right, time to get out that train. You cut your loss as well. So you're not anymore. There's no confusion of whether should I still stay in this trade. If you see, the person you jumped on the trade with also getting out or getting stopped out, all right, time to get out. It kind of gives you a good exit as well. And know when you're wrong. You kind of, because you're essentially just jumping. You're just collecting crumbs, from big players in the market. That's all you're doing essentially.
Right. You're riding behind their flow. You're surfing. They're leading the pack. And you are like a bicyclist who coasts again, behind the guy aerodynamically. You're just coasting off of it and collecting his premium, collecting his profit.
Exactly.
Yeah. So we're like 10 minutes to the open. It still looks bullish. I mean, price action, we're pretty much near session highs, above prior day's lows. I mean, just sort of slow, but. You see anything on the volume? And also, I was going to ask you: do you trade opening minute, or opening first 5 minutes? I
generally stay away unless I see something really exceptional.
Right.
Usually, the opening few minutes can be a little bit too hectic for me.
Yeah.
And I like to kind of allow all the chaos to kind of happen, and then once there's a little bit more clarity, I want to jump in.
Right.
But I like to hawk the opening, at least few minute candles, 1, 2, whatever, first few candles, because it kind of gives me an idea of the intention, because you get all these big players coming in, and it kind of gives you an idea of the intention of where the market, or at least the intention where they want to bring the market. If you see a lot of buyers coming in, but they start failing, and then sellers coming in, and there's a bit of a like up and down battle, generally speaking, for the rest, not for the whole session, but at least for the next hour or two, it might be a bit rangy. It might kind of go up and down. It doesn't really go anywhere. But if you get that kind of straight out of the open, buyers rush in and they're doing really well and the market's shooting up, usually indicates, we're probably going to start trending. So, you want to look for a pullback and then a good entry on the next opportunity. So it's good to kind of really, watch it, but don't be afraid to sit back. You don't have to participate in the chaos if it's a bit too much,
Right. Yeah. Totally. It looks like the other thing is interesting. You can see sometimes price slowing down and volume reflecting. It looks like we're slowing down a little bit. Now we're starting to pop. Still near session highs. I guess, what are you seeing here? Any just kind of a moderate volume up? Not.
Yeah, I'm not seeing anything too crazy right now, even in the volume going up. To be honest, like what I would have expected is once we crossed that high there, that line was terrible, sorry. When we crossed, I would have expected to see some kind of large buy volume come in, indicating, some of these sellers who came in maybe got stopped out. But it looks like some sellers are actually holding on to their position. We're not really seeing a spike in volume occur.
Well, that's interesting.
So I wouldn't be surprised if sellers might try and hold on to their position and try and push it down again. But we'll see. but I'm not seeing anything spectacular. Nothing I would personally want to jump in. I like to wait for the open, just because the volume is again easier to read as well because there's larger amounts of volume, so it just becomes that little bit, gives you a little bit more clarity. You know, when the volume's low, very hard to trade a low volume market.
Yeah, because you can't read it. There's, because one guy with large volume completely obliterates whatever you think is happening. Right.
Exactly.
Exactly
absolutely.
That. Sam, how many trades, how many scalps do you usually do a day, or like what's your routine? I know you also trade live in a room, right? I think.
Yeah. I usually, honestly, like now, I kind of take it a lot more easy. I usually like to take one or two. It depends on, if the first one kind of, because you get a lot of failed trades as a scalper, right? I would, for example, let's say I enter long now. I'm not saying enter long, but just for example, if I enter long now, the market might push up a little bit, but then, it might come back and I've already got my, and I see like there's a change in kind of the aggression, and I kind of get out at like near enough break even. That's kind of like a failed trade. You get a lot of those kind of where the move looks like it's about to happen and it kind of, doesn't, and then you're kind of waiting for that perfect opportunity to jump in. So sometimes, you're firing bullets and they kind of don't hit their target right away. But then, you catch at, there's always a trade every single day. There's always, especially as a scalper, there's always a great trade. And look, just like we said, we saw it in the volume. We didn't see any of these sellers get stopped out.
Right.
They're still holding on to their position. They're now starting to add, they weren't out the markets, then they weren't giving up just yet. So, it gives you such clarity being able to read that volume.
Yeah.
But yeah, I probably take maybe 2 or 3 trades maximum nowadays a day.
Does that include scratches, or are you like 2 or 3 real trades and probably like 3 or 4 scratches in there?
Exactly. And if like my first trade is really good, happens sometimes where it's just perfect, I'll close it down for the day. I'm happy.
You're happy. What's the what do you usually target on the scalp?
As in terms of points, or
in terms of points.
Again, really, I kind of whatever the market gives me. There's no, I never really have a fixed take profit. Like even let's say we're long, and naturally most people's take profit is going to be this high, right? That's quite an obvious area. If we get to that high, I'm holding it and seeing how much further we can go, and I'll trail and I'll get scratched out whenever it happens, or if it's just before and I see that it looks like we're not, maybe like right now what's happening, it looks like sellers aren't really giving up their position. I'll probably take the money. Do you know what I mean? It's fine. I'm a few points away. Who cares? Just take it, be happy, So again, stop loss has to be fixed. There's no negotiating that, in my opinion.
What's your general stop loss on your scalps? Is it a 10 point?
It's usually based on structure. So again, completely
but what if structure is super wide? I mean, is there
then like that? I probably won't take the trade then. If my stop loss has to be like really big, I probably won't take it. But I usually it's not always.
What's the most that you'll kind of allow yourself?
Maybe like on a very volatile, maybe 15 points, 15, 20 max.
That's really little, because like ATR now in a relatively, like 15 points is probably a half ATR on the open. Like when New York opens, it's around 25 ATR, then it goes to 35 ATR, and sometimes it's been as high as 40. So if you're giving yourself 15, man, you are just giving zero margin for error there. But I guess
because the thing is, like I said, so for example, let's say I'm interested in taking a short here. I'm seeing good volume came in just there. It wasn't really that great, but say we saw some good volume and I got in short. My stop, like even if we get above this 18, my stop, my absolute stop has to be here, right? Absolute. No negotiation.
Right.
But say, for example, we started drifting above that 18 where my sellers who I jumped in with, and we start going into drawdown and I see no real sellers coming in trying to defend that, I'm getting out. So I don't even allow my stop loss sometimes to even get here. I'm like, okay, it looks like the sellers are just not interested right now. I'd rather get out. So you have an absolute stop. And
for those of you guys who are interested, I do have a London high sell signal right now, but we are literally 2 minutes away from the open. So that is like basically take, you're just looking to get stopped out. But if it's 721 entry against like a 765 stop type of a structure, you know, only if they just sell it down is this trade going to work. But it is a signal. I do have a signal. The volatility, they sort of, you see this in the volume too. They brought it down. What do you see on the volume side? Do you see, is this fresh selling volume, or is this kind of closing volume?
I mean, a few minutes usually before the open, you see a lot of people exiting, just getting the hell out. So I'm going to assume a lot of this volume are exits, but it could be either. Whenever we're in kind of unexplored territory in the last few candles, it's hard to identify what the volume is.
Right.
I like the volume that is, within the inside of other candles that have just traded. Like this volume here, very easy to read. It has to be fresh volume, right? These sellers can't be stop losses, can't be take profits. It has to be fresh sellers because we already traded there. And if I was interested in the short, that's not a bad idea to go in short. Do you see what I mean?
Right.
But right now, just before the open, this is probably a lot of people exiting. It becomes a bit chaotic. I don't even try and attempt to figure out what's going on. I just let it happen, let it calm down, and yeah.
But I just, for those of you guys who may have taken the signal, it's already in for you guys. We came in at 21, and now it's actually broke through the 700. So if you had the balls to front the open, you could have covered it now at a nice move. But as you can see, you snooze, you lose. It pops right back up. But they're still trying to press it. I'm seeing volatility signals down. We broke prior day's trading high, so it basically broke below the 700 level. The market is sort of testing the reversal thesis here. They ran it up before the open, and now they've kind of taken it all down.
Yep, absolutely. And super interesting to watch. So the first opening candle, always good to kind of just keep your eye on how it develops and the kind of volume coming in. Sellers seem to be definitely a bit more in control, but buyers are interested near the lows here. Let it play out. Let a few candles go by before you rush in. Try not to chase the market when there's too much of a battle going on. Let the battle occur, and then I promise you, there's always, if you just wait another couple of minutes, sometimes the clarity then becomes clear. It's that, try not to let FOMO get in the way. And that's very hard because it's still to this day, I get FOMO and I'm like,
Oh, we all get FOMO.
Yeah.
And sometimes the wrong FOMO, we get scared FOMO. We're like, we should be taking the trade and we're going the other way.
Absolutely.
Yeah. Oh man, I'm trying to adjust my sessions, and I'm on the wrong menu here. So New York is 12. The opening candle here is opening first range candle 717. It's about a 60-70 point range, which is pretty small, tight range. ATR now is at 20, so the average candle is basically 20 points large. London high sits at 759. Prior day high sits at 770. Regular trading hours high. So the pit session high is at 770. So that's where the market, I think, is going to get interested.
Mm-hmm. Absolutely.
So it looks like a little bit of buying coming in, huh?
Yeah, a little bit is coming in, but again, hard to kind of identify who these buyers are, because we did just take out the wick here. That could be an element of sellers who did get in the open and their stops are there getting triggered. So whenever there's like a question mark on the volume, I tend to kind of not base trading decisions on it. But we jumped up to 200 there. There was some fresh buyers came in. It went from 100 something to 200. So a big chunk of buyers did actually come in there fresh. Let's see how effective
I have a volatility up candle now. So essentially, sort of, not a horrible idea to get long here. Oh, oops! I just lost all my signals. There we go. Okay.
So I'm interested to see what these buyers who did come in, what they'll do here. You see sell pressure coming in.
So I tell you what's super interesting that happens on my charts. I'd love to know what this. We have like this structure where we have volatility up, right, and then the next candle is volatility down. So like the sellers reverse everything the buyers are doing in the very next candle. Usually, when that happens, we always go with the last flow. Like whoever's got the last power card. Like I'm going to sell this right now, guys. I'm short on this move right now. I'm short at around, and boom, and I'm in and out. So like you can see. So I don't know if that shows up on your chart here, but like you see how like all the buyers. See, now it's moving even further down, right? Like that's I guess on the delta chart, if you have like the full top stub is all green, and then you have the full bottom stub all purple, that would parallel. That would show the same kind of thing that's going on my vol up, vol down structure like this. And that signal is rare. It happens maybe once or twice a session, but when it does, it's such a high probability. It's a high probability trade for short-term content. You see how it's building all those purples? It's basically all the shorts killing, like all the longs are trapped, and now they got to get the fuck out. That's what it is.
Exactly that.
And so that's what that's what we trade, and it's just great for like the short continuity move to the downside.
Yeah.
So,
and people are getting eaten up right now, left, right, and center. Like these guys here, these buyers who came in, we definitely identified at least 100 of them were fresh buyers. They were doing okay for a few seconds, and then sellers
and they just and that's what I mean. And then now they're all puking it up. They have to be puking it up.
Exactly. So, and you can literally see where their stops are, right?
Yeah.
Right below their entry candle, then all of a sudden a similar value, but on the sell side appears.
Right.
That's them getting stopped out. They're out the market. That was their trade.
Right.
Exactly. And look, and these are big players. These are not small retail traders. There's people with serious money here. And it just shows even they get it wrong sometimes, and that's absolutely fine. But they look at their risk management. They're not placing their stop loss, 500 points away or something ridiculous. They're keeping it super tight. If they're wrong, they're wrong. It's absolutely fine. They tried their best to try and defend their position, but they got taken out. That's okay.
Right.
And you're going to have times like that. And that's when if you were to take that long, if you saw that, and then, if you took that long based on these guys and you're in that position, you see them all getting stopped out. Time to go out as well. Get out the market. It's fine. It's not going to anymore go up. The guys you were jumping on board with are out the market. It's okay. You get out the market as well.
I just want to. I'm going to take your chart off for just 1 second and put mine on just to show people.
Yeah, sure.
The superimposition. So if you look at my chart, right, the thing that I'm talking about here, and here's my. You see this. This is where Sam's all the buy segments were over here, and then you see all his sell segments were coming over here. For me, this is the diamond green against the diamond red. I went right there, short over here, right on this candle, because it was the easiest trade. And then you see the extension. It doesn't always extend this much, but it always extends at least somewhat to the downside. Because what I'm basically seeing is ATR up, ATR down, massive volatility up, completely reversed by volatility down. The price action is showing. And so, like, if we go back now to Sam's chart, and you see that, if you can just bring it down a little bit, you see how that little stub over there had from 212 green. That was all buyers, and they all got completely shaded by the sellers. And then the sellers just kept pressing it. So you could have picked it up either way on
absolutely
on the Delta charts or on my charts.
Absolutely. And if we draw out this low here, where any remaining buyers who came in on this, look at them all getting stopped out. Nice little spike in volume. You
see all of that purple volume. So now, like sort of everybody got puked out. Now we're at the New York session lows at 614. Excuse me.
Bless you.
I've been sneezing all morning long, Sam. And I know, just driving everybody crazy. We're actually at New York session lows, and I think is this what's underneath? I can't even see because I think it's Tokyo highs. Tokyo highs, New York session lows are all crumpled up at this level right here, the price level here.
Yep.
And what will be interesting to see is, let's see if we get continuity, if we get a bounce here. I'll tell you if I get it. I'll tell you what kind of signals I get. So far, I have absolutely no signals. But it'll be interesting to see what the volume is showing as well. Right now, you're still seeing a lot of sellers. The sellers are pressing.
Yeah, there's still a lot of sellers coming in. I'm kind of waiting for some kind of indication that sellers are kind of getting out the market a bit, not necessarily to buy, but to kind of, it's a bit late in the move. Do you know what I mean?
Right. They're covering their opens. They're covering their opens.
Exactly.
Right.
So we kind of got to wait for the next cycle to appear.
We're back to the 600 level. So we ran through the 700. Now we're back to the 600, and probably they want to test that round number always. Does Sam do London and Asian highs and lows like Boris? I don't think so. I don't think he follows session highs, session lows. But,
no, I mean, I sometimes have them on my chart, but I mostly follow the volume profile. So if I just zoom out, sorry, it's a 1 minute chart, so it's a bit takes a lot of scrolling. But essentially, I'm looking at basically where the most traded volume is. So this is obviously the highest traded volume. Here's the point of control. And I'm also looking at little pockets of lower volume. We haven't really had that in this session, so there's nothing really there. But when we get to this kind of area, I would expect to see something happen. At least either sellers get slowed down.
What mark is that? What mark is that on the price level? Is that
the purple one? That's the highest. Oh yeah, 29,520 roughly. Yeah.
Okay. All right. I wonder if that dovetails with any of my sessions. Yeah, you know what that dovetails with? That dovetails with essentially there's 3 level sessions on my thing. Prior days, Globex low, prior days, Pit low, and London low are all within like 10 points of that level. So it's really interesting.
Nice.
It's really interesting how your points of control and my basically session high, session lows, they're all coagulate around those same points. It's not a surprise.
Absolutely. And what's interesting here, it's actually on the previous days, point of control was right here, this purple line.
Right.
And today we broke it. We broke it today, and now we've come back to test it. This would generally speaking, there's usually a good chance buyers are going to step in and try and retake control again around that kind of area. So it might not be a bad idea to zoom in and
why don't we zoom in? You zoom in on your thing, and I'll tell you what right now, all I'm seeing is just selling. I see zero buying indicators. I don't have any
big chunk of buyers came in. But let's see, we don't want to chase them necessarily. Definitely something occurred here, this 1, 2, 2. I need to just check on structure if there's anything obvious. Try and identify big sellers came in actually, trying to that could be those buyers actually getting out at break even or just below, getting stopped out. I think that's more likely what it is. Right, we had a chunk of buyers try and take control. They got wiped out. It looks like sellers might overrun this, to be honest. Buyers weren't posting volume near the highs.
We just crushed VWAP, means we just broke VWAP. This is the one word in English I can never pronounce, VWAP. New York lows at 560 now.
Again,
so is that an exhaustion now? Now we look an exhaustion seller. You see little buyers coming in.
Yeah, so we have buyers again trying to take control. But what's important, in order for a trade to actually stick, right? Yes, you need buyers to come in. If you want some kind of reversal, you need buyers to come in hard, of course. But they cannot lose steam near the highs, right? If they push it up back to these kind of wick highs, and you just see no buyers are interested in trading there, guess what? It's dropping down, right? They need actually what you need in order to break through an area. You need buyers willing to buy at unfavorable prices. And that doesn't always happen, right? People are, if we get to these highs again, there might not be that many people willing to actually aggressively buy there because it's a little bit dangerous now. Do you know what I mean?
Right.
But if buyers do come in heavy at these highs, we could actually break it and start, at least some kind of retracement at very least. Do you know what I mean? And get some kind of trade in. So let's just keep on. It's still very, very volatile. It's still moving a lot more than I expected. So we're approaching these highs. Let's see how the volume, look at that, big buyers coming in. They might actually be able to pop and break out this high here. We're going to expect to see a big chunk of volume.
My first positive green signal, not a buy signal, but a warning to the sellers that this is the price is turning. It's kind of like it's a weak upside signal now, which is very early. It's always early, so it tends to be like if you get lucky on the early move, it's on a V-shaped move, it's worth a shot. But it's not a high probability, but it's an early signal right now. So I would be like this if you wanted to be long here. You would be long at this price. I'd be long at 615. And actually,
a lot of sellers are getting trailed out. You're seeing these spikes in volume every time we kind of break little highs. So sellers are getting trailed out. But what you have to remember that only because sellers have been stopped out doesn't necessarily mean they won't jump back in, right? This is favorable prices for sellers right now. We are in sell territory, right? A lot of people are going to be looking at this and say, we pushed down very hard. This is merely a retracement. It's a great time to short, right? And sellers could come in very hard and take control of this market. And that's where that's where the trending pattern comes from, higher highs, higher lows, lower highs, lower lows, etc. Right? So right now, this is favorable prices for sellers. If sellers pile it on and come in hard, guess what? We're going to go down. Do you know what I mean? But if they're not willing to, if we don't see sellers really stepping it up and buyers are still willing to keep buying, then we could get more of an extension up again. So you really gotta read kind of who is aggressive in this moment. Do you know what I mean? Sellers didn't come in very strong yet. Okay, buyers are still kind of equal in many ways. 40 here. Buyers are coming in actually a little bit more aggressively than sellers, and they're willing. So it's kind of, I wouldn't be opposed to taking longs or shorts here. All I want to see now is I want it to calm down a little bit because it's very up and down choppy. There's a big battle going on. And when there is a battle, the outcome hasn't been determined yet. Do you know what I mean? So you want to step back, wait a little bit, just kind of see who kind of gives up first. Once you see one side kind of laying off the gas, then you know which side to align to, right? So it's all about being patient, waiting a few seconds. Don't try and chase the volume or the candle. Just let it play out, and then the clarity will come.
But the bottom line from my perspective right now is that New York lows are holding. And since they're holding New York lows, positionally, I don't have a positional target. I'm long, guys, just to let you know. I went long, and I'm still a little bit long for like a long target here because I'm basically betting that the New York lows have held. And I'm actually going to take profit here right now. Nicely.
Nice.
So
nice.
So I took profits on those, but I am trading off structure. Basically, I saw that they try to bring New York low again, and they couldn't bring it. They couldn't. The sellers could not bring New York lows. Now the situation could change very quickly. So it's not that the New York low is set in stone here. It's just that for the last two candles, the buyers. The sellers couldn't make, if they can't make fresh lows, then the opportunity to squeeze them higher becomes better. Right now, it's still very determined. I basically had early green signals, early green possible signals, but still no definitive volatility breakout to the upside signal yet. The buyers still, to me, the buyers in my structure, the buyers are not in control.
No,
and it looks like the sellers are probing in your structure, right? They're still probing it.
100%. Sellers are starting to pile on the orders a little bit lower down, but buyers are also piling it on. It's still, for me, this could very easily still pop up after, or it could continue. There's nothing for me that I would put real money on right this second.
Yeah, it's a tug of war. It's just
because the thing is, in this second, it could look a bit more bullish or bearish. But then give it 20 seconds, a big buyer might come in, or a big and then everything changes. So you got to be quick to kind of, all right, get out, and if you do jump in, because it really is a domino effect, the market, right? It's absolutely a domino effect.
Yeah, you can really see that in in a delta.
Big. Look at that.
Whoa.
Huge sellers
Sellers
just came in.
No
No way of knowing that would happen. Right? There's no way of knowing sellers would just, a big seller would come in that second. But they did. So that's why I'm saying it's like very dangerous to trade when the market's like this and there's a big battle going on. Just be a bit patient. I'm telling you, the perfect opportunity will arise when it calms down a bit, you know? But yeah, buyers couldn't really, you know, they didn't put enough volume at the top, you know? So we'll allow that to...
now, and the 29.5 looms large. I wonder, let me see if the macro picture has changed a little bit. Let's see if oil got, let's see what we're looking at. Yeah, oil popping up again. So that's, you know, that's sort of acting as an annoyance. Yields are still down, but oil off of its lows. Clearly, the market doesn't like that. So we're really pressing it hard here. We just broke did we just break the 500? Wow, it's New York. Yeah, we just fresh. Tokyo lows is 430. Yeah, we just blew
really
through
flooded down.
So this was a big seller. Now, these kind of things, what I find interesting is if you give it 5-10 minutes, we might actually have a reversal signal here. Yeah. But you have to really be patient. On my side, it really takes a while to turn this into a buy signal. Probably on your side too.
Oh, 100%. I like to wait at least, realistically speaking, after the open. Just wait for it to calm down, and then the trades appear. You know, I've noticed recently around my time, around 4 p.m. it's been a really great time. So that's hour and a half after open. It's been really nice to trade. Obviously, it changes over the time of year.
Sam is trading by with data feed this year. He's trading Trade-O-Vate. He's just trading.
Yeah. For deep charts, it's rhythmic feed. Yeah.
Oh, these charts are rhythmic on that one. Okay.
Yeah. And then this is a Hola Prime futures Trade-O-Vate account. Yeah.
Right.
Yeah.
Why would somebody do themselves when you can swing and relax? Because there's no such thing as relaxing. You know, swing. All it means when you're swinging is that you're going to just lose more money on bigger stops. There's no guarantee that a swing actually has any probability higher than a scalp. It's just a personality thing. Like, you know, if you like to trade short term or long term, but like, don't fool yourself into thinking that swing somehow is superior because it's a longer time frame. It just means longer torture for you. If you're it means you're going to be tortured over hours and days versus being tortured over minutes or seconds. That's all.
It's funny you say that, because when I've tried swing trading, I sucked at swing trading because I like you said, you're just extending the torture. I would look at the chart constantly, and I couldn't relax. And at least with scalp, I mean, look, like you said, it's personal preference. Some people can just relax on a swing trade, and fair play to you if you're that person. But me personally, nah, I'm geared to be a scalper.
Exactly. It all depends on your structure. By the way, guys, we're just pounding. I mean, we are in a super strong, like, what's really interesting is as strong as we were buyers in the 8 o'clock hours, so we are sellers now. And then nobody could predict this. And that's the whole point, is that there's zero predictability of this kind of swing up or swing down. All you can do is intelligently react to it. Because anybody who told you, oh, you know, we're going to go down to here and up to here. No, you couldn't have guessed at 8 o'clock that you had a 200-point rally. You couldn't have guessed on the open that you're going to have a 150-point decline on the move, right? And I guarantee you, if we go 300 points up higher by the end of the day, none of you could have guessed that either, right? Because we just don't know what the next hour or the next buy. Well, that's why scalping kind of is interesting, because you don't need to forecast the next hour. You're just trying to forecast the next minute or two, which is an easier handicap some ways.
Absolutely. Well said. Yeah, no, I mean, trying to predict, what's going to happen in the next couple of hours and stuff. The reality is trading really is a domino effect. You know, in order for the market to go up, there has to be certain things have to happen in a certain order for that to continue. For us to do a
Right.
full-scale reversal, you're going to need to get sellers exiting the market, number one, right? Taking their money out the market. B, a whole fresh new wave of buyers coming in. And then buyers need to defeat sellers where they're trailing and where their stops are going to be.
And the straggling sellers, all those swing market sellers, getting out because they're not. I actually, guys, have right now 26 seconds. My first long signal, like green diamond signal.
Nice.
Now I'm waiting. It's got to complete the candle. But if we do, we're going to trade off the session lows. It goes away. It goes away. Don't rush it. I will tell you if it's a legit signal. The vol just went away. God damn it. I love it. I love it when I have the signal, but here we go. Good. It closed on the top long. I'm long now against New York session lows, guys. So that is where I'm long. And we'll see if we can pull this up a little bit to the upside. So I'm basically holding. This is your swing long. I'm not doing a scalp long. I am holding it against New York lows at 407, and I'm trying to see if I can get maybe like 480, 59. Basically 500 is my target, somewhere around there. So you got to give you. This could be a 5, 10, 15 minute trade, or it could be a very quick stop out. Either way, but we'll have to see. But at least now, like what my structure is showing is that the probability of a bounce is possible. That's all you can take away from my signal is that the possibility of a bounce is possible. How's it looking on the volume charts?
Yeah, I'm just hawking the volume right now to see who's coming in. I'm trying to see if there's any big orders come in. So what's important to look at, let me just make this bigger just for the viewers. You see when these numbers are developing, say this went from -10 to all of a sudden positive 80 in one instant, that's a good sign, right? Because that means 90 plus buy contracts came in a second, most likely from one entity or individual.
Right.
Do you know what I mean? So I'm looking also at the chunks of volume coming in.
Yep. I'm out,
this is
guys.
A very nice
the 500 hit, so that was nice. That was another swing trade to the upside.
Beautiful.
So, just letting you guys know, I'm actually getting a secondary buy confirm.
Beautiful.
Secondary vol confirm. So volatility broke up, and it's kind of interesting. It's definitely showing positive moves here. So it's. Oh no! Actually, sorry. I take it back. Just only I don't have a secondary confirm. It just died on me. So, and you see that it dying out on the volume. But the bottom line is, even with the volume, with the delta, even if you weren't scalping and you were sort of swing trading, you can just use structure, like the absolute low structure as a kind of a longer term stop. And then maybe the moves in delta. That's that. Once you start seeing those green boxes start building, you can absolutely use that as an entry, right?
100%. I'm starting to look. I quite like this as a potential buy because I'm seeing a bit more buyers, but I just want to see a bit more bigger numbers coming in. Truth be told, 40 is okay, but I just want to see a big chunk of buyers come in to really. Sellers are still trying to short the tops of it.
Yeah. You want the buyers to come in and destroy the sellers.
Yeah, I want to see sellers get trapped at the bottom and buyers trade above them. So we got that 45 on the sellers near the bottom. I want to see buyers get above and post big volume around here. Then I'm happy to go in. So I'm just waiting. Just want to see buyers trap those sellers. If sellers manage to break through, then all right, it's cancelled. It's not a trade. But
breakthrough where?
Yeah, all right. I'll go in and I can have my stop just below. Sorry, this is a brand new account, so put a sell stop here. I don't know why the line's not appearing. Let me try to figure this out. There should be a line. All right, it doesn't matter. But we'll put a stop there. Where's the exit button? Sorry, I haven't. Oh, there's exit button. Let me make that a bit bigger. In fact, let me make this bigger. There we go. What I want to see is buyers really kind of come in at the highs and trap some of these sellers at the bottom. We're going sideways a bit.
Yep.
I want to see buyers come in. Obviously, they'll come in at the bottom. That's expected. You're expecting buyers to come in here, but I need buyers to come in at the top, right?
Right.
Like where we are right now. I need buyers to add volume.
Right.
And then we can get a pop.
Volume a little bit here. They're just trying to break it up.
They went from 50 to 20. That means a big chunk of sellers came in, but I'm seeing a few buyers coming in, but I need bigger numbers. If they're unable to really get that pop, it'll be time to potentially. So it's very critical what's happening here. I need buyers to absorb these sellers and really push them up. If it doesn't happen, then we're just going to rotate up and down for a bit. Come on, buyers, where are you? There's a trickle coming in, but they just at the top here. This went from, I think it was like 50 to 20. I need to see. There's a bit more buyers coming in, but we need to trap those sellers. We don't want to get much lower than those sellers.
It's a tug of war, baby. Until like
it
this
is.
candle, like it's the bottom top candle. That's you got to just.
Oh, there was a nice little chunk. Yeah. All right, I want to see these buyers hold the line. Come on, buyers. Don't let these sellers overrun you here. Hold the line. Keep holding it. Good. They are struggling a little bit in getting this market up right there. Look, there we go. Come on. Trap those sellers right there. Beautiful. Now add volume here. Come on, buyers. Yeah, they just keep failing and adding volume near the top. So it looks like it might just rotate down a little bit and keep going sideways. And we'll wait for a better opportunity here.
Yeah. It's
sellers came in quite strong and we're out. Okay, fair play.
Yeah, the sellers
and right there.
Yep.
Do you see that big spike in volume right there? That's me and those other buyers getting stopped out. We both had our stops exactly at the same place.
Right.
And that big chunk, 140, whatever it was.
Right.
That is all those buyers who joined along with me in this area getting stopped out, which is fine.
Yeah.
Because there might be another opportunity. Let's make this a little bit bigger so I can see it. And notice how there's another wave of buyers trying to get the market up, but I'm not going to chase them just yet.
Right.
Because near the bottom, you're expecting buyers to come in, right? That actually doesn't look terrible. It's still very choppy though. See, buyers are getting trapped at the top here.
Yeah,
in this area. And it looks like if sellers come in heavy here, we're going down.
The sellers are keeping it down. For me, I would need to see them clear the 500 level on the
500,
the 29.
Oh, right up here. Yeah. Near the tops.
Right there. If they can clear that level, the sellers are going to give up because that's the London low.
Oh, 100%. Yeah.
They're going to London
all
low.
The sellers, their stops are up here, right?
Right. So I would
see
really
buyers are willing to post volume, but I still think buyers are going to take this, to be honest. I think they might take it. Sellers struggle near the bottom here as well, but if they come in a little bit strong down here, they will break this level. Sellers will break it here if they come in strong here, but I'm seeing it might not be terrible to re-enter, to be honest. But I don't like how ineffective the buyers are. They are posting a lot of volume here and we're not really getting much higher, which is my only red flag at this moment in time. But if they come in harder, I think they will break it.
Yeah.
I don't think they need that much more volume.
It's just not quite ready yet. They haven't I've seen this from price action so many times where you don't need to be early. You need to be right. So there's no need to be a hero right now trying to get long. Let the buyers kill the sellers first.
That's it. You're just waiting for that perfect opportunity.
Right. Otherwise,
coming in near the lows.
Otherwise, the sellers are like going to just simply wear them down and then drift it all the way to New York lows, and they have to rebuild the price action again.
Just looking for any clues.
Right.
Nothing spectacular yet. Nothing yet. Patient. You'll see it. When it happens, you'll see it. You'll be like, oh, right there. Nothing yet. Come on. Show me something. I can feel it. I can feel it about to occur. Any second now. Something big happened. There's a big chunk of sellers. Sellers are coming in really aggressive. I think they're going to break it. But let's see if they actually do. If they don't break it, this might be a good chance to go in long because we could trap those sellers. But it looks like they are actually trading a little bit below. Still not. They're still just trading within that area that nothing's actually been broken. If we get above those sellers and post big volume, that could be it.
Which
really getting squeezed.
Like above where?
These
above,
1, 2, 1. We're just yeah.
Well, there you go.
Now you see there's 50 in there. That's not terrible. All right, I'm going to go long again. If we get below here, then I think let's just add a stop real quick. I need to make the footprint a little bit bigger so I can actually see it. Now, really, I don't want those sellers I want to squeeze these sellers out, right? So we want buyers to keep coming in heavy above these sellers and squeeze them out and take their stops, essentially. And once it does, you get this boom, you get this pop. You know, these kind of sudden pops up. We still haven't squeezed them out yet.
No, they can't take out the highs of that candle.
Got in a little bit early, but it's fine. Because even though sellers are posting a lot of volume, they're struggling to break this area here. So they got to post even more volume down these lows in order to break it. Buyers just need to post volume up around here where we are now to really pop it up. So the probability is a little bit more in the favor of the buyers right now. There's a bit more volume. See, the moment they posted a little bit more, we're getting a tiny bit of a pop, but we just need to keep that momentum up and then we can actually take out all the stops. And I think it's about...
We're at 500, that 500 level. London low is 504. So this is the level. Like we take out the 500, we're going to run 510s, 511s. That's the 504 London high, London low. That's the battle right now. That's the battle 100%, right now.
Yeah. Let's get the potential exit button ready. Sorry about having to like halve the screen here. I know it's not ideal, but there's no other way.
We know exactly where you are.
Yeah. Like obviously in real life, I have two separate screens where I have these separate things, but for the stream, there's no way of showing two screens annoyingly. I don't think so.
For sure. We totally know where you are.
Makes it a little bit more difficult just to squeeze everything in one little snippet. See, I'm seeing buyers get absorbed again at the top here. We could get another little rotation down, which is very annoying.
Pushing them back off that 500 level. They need to close through that level, and they're not able to. The sellers are swamping them.
They keep kind of failing at the top here. But the important thing is we don't get below this 121. If we can stay above it, we still have a chance to squeeze these sellers out.
Yeah.
So we don't want to release these sellers, and it's getting close to it now. Come on. If buyers can keep defending this, we can still go for another rotation up, but it's basically a sideways market. We're just consolidating, essentially.
Yeah.
And what is consolidation? Ultimately, it's just a build-up, right? It's accumulation. Orders getting built up. These sellers are coming in again at the bottom. They're trying for another push. I think they might just take it. Look at that, 45 orders. We almost got them out, but I think the sellers might just take it here. Look at that. They're posting 80, 70. They've got it, I think.
Yeah.
That's a shame. We almost had it at the top there. We could have had it, but
it's close.
It is what it is.
It just didn't hold. I mean,
it just didn't. Yeah.
From on my trades,
around that.
Right. On my signals, I did not have a signal because it just didn't hold. Because I'm always trading on the candle close, on the hold, and it just didn't hold those levels. By the way, gold is popping. I'm just on the male side. Ooh. Speaking of gold, guys, let me just sort of show you a couple of things that I made specially for Ola. Let me see if I can do this. Wait, let me remove screen.
Oops.
Can I only share one screen? I guess I can share only one screen.
I think you can only share one screen.
Yeah. Remove. Let me remove this. Oh, hold on.
It's annoying. They should figure out a way of sharing multiple
It's so
screens.
annoying, right? Remove and then present. Wait, stop screen. Add to stage, stop screen. I can't do anymore. Share screen. Okay, I want to share the screen window. This one. Okay. So what I want to share with you guys, this is the Prop Trader Ola Edge MT5 CFD tool that I made, which is obviously awesome. And all of it is available on totally free for anybody who gets the Hola Prime account. And by the way, Sam, I think you guys are running some really good deals now, like this.
Oh yeah.
Can you tell us a little bit about some of the deals you guys are running?
So, are you talking futures or the whole, like everything?
I think everything, like both on the CFDs and props. You guys are running some really cool stuff.
So we've actually just released a new CFD account. It's limited time only. It's called Hola Prime Boost. And you get up to 500x leverage on this account. So the whole point of this account is for traders who are, who want speed. You can pass your challenge in 1 day. It's a fantastic account, and it's selling like hotcakes right now. People are loving it. It's designed more for, I would say, more serious traders.
Right.
But it is great. You can really add size in an account like that.
So here's the perfect tool for that account, which comes in totally free. First of all, you see in my tool, you can do stops and presets totally just like in futures, just basically pre-built stops and presets that are right then and there. But the real value of this tool is partial exits. But here's where it really, really blows people away. If you go into properties, you guys can't see the properties tag here, but if you go into properties, you could actually set it to be automatically partial exits. So in other words, imagine you're trading gold right now, right? And you're long over here and you're in 500 to 1, give me 1 day to fund the account. You could literally have it take, and let's say the target is $4 on gold, $4 ultimate target. You can have it take a partial exit at $1, partial exit at $2, partial exit at $3, partial exit at $4, all automatically. Literally, you don't do anything. The robot does everything for you. You could have it set to every time it takes an exit to stop us at break even, or the stop is at the original stop, wherever you want it. Gives you the full modification. Once you basically enter a trade and have it automatically partial exit, you have the robot control the risk for you. Now, in a huge lever account where you get this big, move like this, like you have in gold, this is the easiest way to get funded in Ola, because you're essentially not having to constantly point and click and get out of the position, and you're scaling out at every single thing. And you can set those things at a quarter size, at a third size, at a half size, meaning, if you want half the position, like if it goes $2 up, then you sell half the position. You can do it any kind of ratio you want. It's all configurable in the back end. So the most important part is it's all totally free. It's all available on proptraderedgetools.com, which let me just sort of get off the, I'm going to put a new screen on here for you guys to show you. Oh, hang on a second. Sorry. So
I got to say, Boris, that tool is such a game changer for anyone who uses MT5. Like, if you're not using that tool,
right,
genuinely such a game changer. Honestly, you built a fantastic tool there.
So much easier than just simply hanging. And proptraderedgetools.com, just simply go there. You don't have to do anything. You literally just go there. If you already have an Ola account, just show them evidence, just take a screenshot, and it will automatically let you download it. If you don't, just simply go to Hola Prime right off that account, buy it, take a screenshot, come back, and download it. You don't have to email me, you don't have to do anything. It's all there automated for you. And it's super, super easy to use. And the most important part is this whole thing comes with a guide of how to use it, both video guide and all of the written guides. So what every single button does, Plus, there's also hot buttons. So you hit the S button, that's a sell. You hit the B button, that's a buy. You hit the R, that's a stop and reverse. Stop and reverse is like one of the best things you can do if you're wrong in the market, right? All of that, just single button clicks that are all there. You hit the X button, the whole trade goes off the chart. You know how hard it is to, like, you have multiple positions in MT5 and you got to single click all of them to get out of the way. This, just simply press the X button, all of them get out of the way. So, like I said, this is a tool I made for what I asked Claude, what do most professional traders want? And he gave me the answer for every single feature set that they want, and we put every single feature set into it. So it's super easy. One other thing, by the way, I totally forgot, is not only does this tool give you the execution stuff, but just like in the futures platforms, which doesn't happen on MT5 platforms, it will tell you whatever account you have. You tell them what account you have, or you can configure it yourself. How where your P&L is. Like it will know the rules of Ola and kind of tell you, you're $500 above buffer, or you're like only $500 away from being stopped out. It tells you it's attached to the tool. It's a rule guardian thing. So there's actually two things in there, both a execution tool and a risk control buffer tool that comes in there, and it's all in the dashboard.
That's awesome.
So hopefully you find it very useful. Everybody, please go ahead, get some Olas. Ola is just a great product. And now I think the coolest thing, it's been very hard, I think, to find. I think it's almost impossible to find a CFD broker, CFD prop firm that gives you a one and done. Like you can get past in one day.
This is honestly, I haven't seen anyone else do it.
Exactly.
I mean, that's why it's limited only right now, because the reality is this is a very new product in like the prop space, I would say, for the CFD side. Yeah. And if
this is only something you see in futures,
people like it.
Exactly. It's only something you see in futures, and the fact that it's now a prop, and now the tool itself is futures like. It's very you can literally preset stops and targets, and boom, boom, boom. You are trading like a futures trader within a CFD setting. So all of it makes it just much easier for you guys. Enjoy it. I made it free for you. Just get an Ola account. There's zero limit. Doesn't matter what account you get. But obviously, this new account is the one that I would get, because that gives you so much power. And you can, the moment you get quickly funded. Remember, the other great thing about Ola is you get funded quickly. They pay, and then you start making money. They pay out like within hours, like
1 hour, yeah.
1 hour. And so it really, sorry, go ahead.
This tool, I've seen tools with less features being marketed for like literally being sold.
And
it's crazy that you're giving it away for free.
If you go to mt5.com, there are plenty of guys that are selling this for $200-$300, a pop, because and less sophistication than this has, because I've really put it. There's trailing stops in there. There's huge. You see the documentation. Documentation is huge. If you really want to, configure it to your heart's content, you can. But if you just want a simple buy, stop, manage my partial exits, not keep it simple, stupid trades, boom, you're there. You're good to go. Anyways. Guys, so much fun. I want to thank Sam again for coming and hanging out with us today. As always, we're going to trade a little bit of Ola tonight in gold, so come join us 7 to 8. We're going to showcase a lot of these things. I'm going to showcase a lot of this stuff on MT5 today on the gold trade. And again, I want to thank Sam for coming in and hanging out with us. He is a true.
Thank you, Boris.
Really interesting to see footprint in the same kind of confluence as our trades come in and make the thing. By the way, we're finally popping now. I'm just going to tell you, we're finally showing.
Oh yeah,
a little bit of a move, which is always the case, right? That's the thing. If you can't get you have to give it several tries to get that move. That's the whole thing about scalping.
Oh, 100%.
Scalping is all about giving yourself multiple opportunities to succeed. Never get dejected over one or two trades. But we had a great day today, which we actually had 8 in a row consecutive winning scalps in Ola earlier today on the future side, which is awesome. We made a couple of really good positional trades, and we're going to keep doing that. I love it, and we'll have Sam back on again in the fall when when the markets hopefully give us something else.
Oh, absolutely. Yeah, I'm always happy to come on. It's always a pleasure with you, Boris, and everyone in the chat. So
Great.
yeah.
So
Been a
thank
pleasure.
you very much, Sam. Thank you, guys, and I'll see everybody tonight. We'll see everybody later. Take
Awesome.
care. Bye bye.
Thank you, Boris.
Bye
Thank
bye.
you.